Good morning, everyone, and welcome to InvestorExpos show for August 12th. My name is Anna, and I'll be your host today. We are having a great lineup of 4 speakers for you: Thomas Barmann, Marina Villatoro, Norman Hallett, and Alla Peters.
Alrighty, we'll want to make it exciting, for you. So therefore, I recommend take some notes along the lines because I share a lot of content. Today's topic, rule-based short-term and long-term trading. And I put a lot of examples together. Live, because you know trading is the virtue. And before we get there, my name again, Thomas Barmann. Never Lose Trading is the company. And I'm here as educator and trader, not broker, dealer, or financial advisor, and I want to make you aware of the risk of trading. With that said, let's dive into it. Never Lose Trading is a concept for one-on-one training and coaching in the matter of investing and trading. We are more than 10 years in business, and we focus really on one-on-one at your best available time, at your best available days. And we offer you algorithmic concepts that follow institutional money moves. I'll go into all these details. Never Lost Trading is not a promise to never lose a trade. Absolutely not. It's never stop loss trading because we show you concepts of trade repairs. However, we strive for high probability trading, and that's our brand name. And with that, we want to go forward into today's topic, rule-based trading. Just a lot of hints. What is rule-based trading and often what happens? Define trade situations. You know when to trade and when not to trade, because a lot of the traders nowadays, they make assumptions or guesses. That's not good. Rule-based trading is the only way where at the end of the day you'll come out clean, or even better, you make money. Clearly defined entries, exits, and stops instead of floating targets and assumptions. Position sizing. So that means not always the same position. Risk and reward decide what you do. A lot of traders always do the same amount of money, same amount of shares. That's not good. And I'm going to refer to all of that. Risk management, one of the key essentials to be in that business long term, because hope is not going to pay you. Hope's going to be very dangerous for you. The risk management is get you over the hump. Business plan, I mean it. I mean a written action plan, when to trade, when not to trade, how many trades you want to conduct, what do you want to focus on, not on the spot decisions. Somebody gives you a hint, okay, buy that stock, and you do it. It might work out, but long term, if you want to do it right, you need to have a good plan with all which I put in here on the list, and in particular, risk limiting strategies. That's essential. If you can limit your risk, if you can trade more favorable than you lose, then you have a chance to get money from that market. Unbalanced risk is going to take you out of the business pretty soon, and so we don't want you to take that. And we give you a lot of examples now. It all starts with the system. So what do we mean? Today I will introduce 2 systems to you. Trade colors, our very basic system for the entry level in algorithmic trading, and top line, as it says, the top of the line. That's actually the system we sell and teach the most. But I want to give you 2 chances to look at how these systems consecutively can produce opportunities where you can decide from the system, when do I want to trade, how far do I want to go, where do I put my stop, how is risk reward in the relation, and how can I benefit from the market with that. So the introductory system, tradecolors.com, to algorithmic trading, it helps you to spot and follow institutional money moves. Why? Price is not a variable. It is the result of multiple variables, of underlying changes in supply and demand. And with that, those can be measured and extrapolated, and will help you doing that and help you to trade at crucial price points. You see here 2 arrows. Those were 2 crucial price turning points, and you can be part of this when you see it, and you cannot be part of it if you don't. So what we do here in Trade Colors, we color up sequences in blue and down sequences in red. And so I'll take a little pen here. So when you see 2 of a kind, very simple, so this one here, 2 of a kind, and the high of that second candle is taken out, that's a trade to the upside. 2 of a kind to the downside, and the low is taken out, that's a trade to the downside. Big advantage, you can work with buy stop and sell stop orders. You can pre-program everything, and I'm a big proponent of pre-programming things. And I show you an example like yesterday, a lot of my trades went off wonderfully, favorably, and they were pre-programmed. I had nothing to do within doing the execution. And what do we want to strive for? We want to achieve with our systems a 65% and above attainment rate. But only then and only then you have a good chance for making money off the markets. I did in other presentations the math and the algorithms of why that is. Trust me, just on this one, if you trade below, your chances of coming out making money will be random. But it's not easy to achieve because it needs a lot of background information and filtering to filter signals from noise to propose where trade examples are. So now I go into the NQ. Just picked an example because a couple of days ago we were asked by a client, can you just give me a hint on the NQ, how it developed on a time-based and on a tick-based range? I go time-based first. So what you see here is the development of the NQ, that's the NASDAQ 100 mini futures contract. And on this one, you see here highlighted in orange, those were situations, according to tradecolors.com, that were first of all set up and confirmed. Yeah, set up and confirmed, because we always buy above the high of that second candle or short below the low of the other second candle. And in the NQ, that's easy because you can go long and short simply. Yeah, so then let's look what we are having here on the chart. It's a 2-hour chart, and a 32-day period was covered, and 9 signals were put here on the chart for you. And now we'll look of how we did, yeah, and what's going on. But a very essential little tool I want to show you, it's up here. So maybe a little small in my presentation, but this tells you at any point how far the price expansion shall go. And the average price expansion of the time frame we were looking at here is 80 points. 80 points in the NASDAQ 100 E-mini futures relate to a $1,600 change in the value of the underlying, $1,600. If risk and reward go hand in hand, and we say it is like that, then that means a $1,600 risk and a $1,600 reward, they're coupled to each other. And so now we want to see how many winners and losers of the 10 trades we had and what we did with it. So basically, oops, I went a little ahead of myself. So let's go back. We had 7 winning situations. You see them here on the chart, yeah, where we pointed out the winners. And also we had losers here. We couldn't get it right and we were stopped. So we had 7 times winning $1,600 and 2 times losing him, making a total of $8,000 in a matter of 32 trading days by following the system. And the expectation rate at 65% was about $3,840. Yeah, so with that, we were very positive in the period we observed, and we produced a good income. So what's your net that you have to have to bring to the party? It's about 17.6K. That's what you need to have in your account because overnight margin applies in most of the system, but also you have brokers when you work with bracket orders, they give you a break on what you need to have in the account. But I show you alternatives if that's too much for you. If you can't bury a $1,600 risk, but then we'll scale it down either to a different time frame or different contract or a different way of trading. There's always opportunities, and I'll show you some more examples of how you can forgo them. Yeah, so then let's go forward and see those trade rules. Yeah, we want to have it easy for you with that system, very simple. We want you to say, this makes trading easy for me, counting colors 1, 2, 3. So what do we mean? So you had 2 of a kind of the blue, high taken out, and you went for 80 points. Red, 2 of a kind, low taking out, you went for 80 points. And we did that over and over again. Here we went a little higher, doesn't matter to us. We want to trade consecutively for the byte that the system is spelling out. There's also an opportunity that you see how much you could do at max, but that's not what I prepared for to show you. I just want to show you very basic, very generic of how that all works. So you see break of the high, break of the low, that's where you go. The points, I talked about 80, and they come on a dashboard. Here on the last candle, it was 76. There's always a little fluctuation in it. When volatility goes up, that number goes up. When it goes down, it goes down. Yeah. And with that, we'll go to risk management, another essential tool that's going to make or break the success of your trading endeavors. And so what do we mean by risk management? Yeah, risk management carries us in relating risk to reward. So where you know where your stop is and you know what you're trading for and where you enter, you can relate them. And a simple rule, don't risk more than $1.20 to make $1. Simple. I'm not saying that you always have to do it like that. Some trade situations that are more favorable, you have to risk 50 cents to make $1, better. But that's the max we recommend for you to do. And let things not get out of hand. The risk per trade should be between 2 and 5%. If you can hold that and hold yourself accountable for it, we have a good chance, because then you will never have a big drawdown in your account when you do it right. And on the other hand, if that doesn't work, like the $1,600 is not in relation to the 2 or the 5% here on the chart, you need to swap the contract or the asset class. And I show you different examples of how you can do that. Yeah, how to swap a contract. The very simplest thing is you go to micro account. A micro account on the NQ, yeah, the NASDAQ 100 is 10% of the mini. So that means the $1,600 threshold for the risk that I showed you in the example, it reduces itself to 10%, $160. So with that, can you still hear me, guys? I just had a notice that the microphone was going on and off. I hope that still works for you. Okay, yeah, so then I'll continue on, and you can change the time base. Yeah, so there could be a different time base here. So that means you can scale down from a 2-hour chart, which we had, to a lower value chart. And we can go to different asset class, going maybe from futures to Forex or to stocks or to options. All of that is possible. Or we can go different exchange conditions. And I'll show you an example. And the key will be, see how the system at any conditions always follows the same rhyme and reasons, putting out the trade opportunities right on the chart. What you see here is for the NQ by client request, 3,200 ticks. And I just observed here 2 days, the last 2 days I had here on the chart. And what you see is the average price expansion was 16 points on the NASDAQ E-mini, and that relates to $320 price change. And we produced 7 opportunities. You see here, there's opportunities, and you see here also one where risk and reward was out of balance. This one we wouldn't take. Yeah, so therefore we have clear rules when to trade, when not to trade. And in your observed time frame, we had 6 winners, 1 loser. So that means 6 times 320 made, 1 time lost is a $1,600 production of income on the full contract or on the E-mini contract. If you scale it down to micro, it would be 160. So there's always a way, but essential is whatever you change on the system, it repeats its signals and you can trade along with it. I give you 2 stock examples for swing trading, yeah, shorter term, couple of days in the trade. So you see here Microsoft on tradecolors.com. So here on a daily signal, you had the breakout, so you could do your buy stop order, and you were trading here from the dashboard for 5.7, between $5 and $6. That was easily attained in here. So then repeated itself, that was ticked out by a little, but that's good enough to come in a trade. So $5 or $6 done. And again, and then you see, oh wow, what's happening? Yeah, but you know, 2 positive things. On a swivel up and down, you didn't have confirmed signals. Yeah, so here you see it looks like a setup, but the next candle didn't tick out the high, and with that you had no trade, and you don't want to trade. But it's also, we are not in the business to just trade Microsoft. We can change the asset class or the asset. Yeah, so let's now look of what we had instead in the same time frame. Goldman Sachs produced 2 trading opportunities, and we were able to follow them. So the average here was like $4.50 price move, set up 450. We got a little surplus because here it gapped up and gave it to us, because you know, on a buy stop limit order and on a limit order on the out, you'll be filled at the higher price. We had targeted this, the stock gapped up, and from there it came down, produced a short signal here in its sequence that came to target, and then produce the signal down here in the target. With the tradecolors.com, you get watch list indicators where you can see which of the assets trigger a signal on a time frame you desire. Here's a daily chart that also works for weekly, for sub time frames, but you can see where something is going on and follow along with the system, counting candles 1, 2, 3, moving to the upside or moving to the downside. Yeah, good. Okay, so let's go ahead. If that is for you, yeah, then we offer the program so that we can install the software for you, give you real-time data, yeah, give you clear-cut entries, exits, and stops, and in addition, help you to do the position sizing, define the time in a trade, essential for option traders, do the risk handling, and write with you a business plan for trading success where you know when to trade, which situations to focus on for the asset classes you choose to do. So if that's something for you, I have here an offer, and I show you the top line after. And in the offer for Trade Colors, the system with the education, with all of that installed for you is $2,497. We have a little summer special for you. Instead of 4 hours of training, we give you 5. That's an additional value of $400. We give you the NLT box indicator. I wasn't referring to it, but it helps you to see breakouts to the up and to the downside. That's part of top line, but we include it here so that you can see better on the chart of what's going on. So therefore you get an extra value. You don't have to buy that now from the internet. What I want to offer to 10 people only, write me an email, contact@neverlosttrading.com, and I'll meet with you for an hour and we figure out if that works for you. You can challenge the system, say, I want to look this time frame, and we count it up. We want to win more than 65% of the time, and then see if that can help you to be a consistent trader. So take the chance, schedule for a personal hour where we meet online, one-on-one, not a group session, and cover your needs. I hope you take that challenge. If you want to do that, write me an email, contact@neverlosttrading.com, or call the office 866-455-4520. I hope you take me on the offer. It'll be exciting to see and experience in an hour what can be done for your trading. So now I go to Neverlos Trading Top Line. Yeah, Top Line is our top of the line product, and actually the one that we sold the most over the years. And here you see how a chart can look like. Yeah. So you see on a chart the spider, yeah, the S&P 500 ETF, and we have consecutive buy and sell signals spelled out here. You see here sell below, buy above, and the up signals are carried down from a lower study that we put. And here you see where they lead you. But what I want to show you, very simple. A lot of you have 401k, IRA accounts besides your trading accounts or bigger trading accounts. With a system like that, you can operate when things matter. So meaning the buy and hold investor at 335 in is now at 335 out, has a zero, and might be happy, yeah, because after all the issues we had during the pandemic where the markets tanked, now we are back to normal. But had you acted as the system proposed, you would have gone into cash right here at 330, yeah, cashed out and be out of the market. I'm just doing a cash. I'm not trading to the short side. Just looking for 1K. You often don't have the opportunity. So cashing out, then getting back in when the system tells you buy above 264.70. I'll make it easy. Here you had a loss, so 335 minus 5, and then you back in at 270. The 270 you get to the upside, and today we have 335. So that means you made $65. 5 you lost. So the net profit of the whole taking and just doing very simple, getting out when it matters, get it in when it matters, you produce the $60 profit per share or for your entire holdings on 18% return. for a holder of $100,000 in IRA 401k, that pays for more than the program and gives you a nice return on top. So take those opportunities, in particular traders with higher holdings, finding a system where it guides you, gives you the crucial turning points. And here, for example, that would be your trailing stop line. So we are ways away from that now, but we are moving to the upside and we are moving to the downside with it. I'll give you more examples also for shorter term trading. Yeah, so short-term trading example, and here it was also for a client. You'll see a lot of traffic on the chart, but I want to tell you one thing. If you learn and do your driver's license or you learn to fly an airplane, there's lots of details, but they can be learned. It's easy. We all learn to drive a car. Some of us learn to fly a plane, and with that we follow rhyme and reasons, and we follow those situations whenever they occur. So you see here situation one throughout, and you see situations where we say, even so there's a signal, we don't want to do that because of the reason. And this is what we teach in our mentorships: when to trade, when not to trade, using the system, trading to the upside, trading to the downsides. So here we have about 35 days we observed. We again took a 2-hour chart. What you see here is the E-mini S&P 500 futures chart. And so here we produced 2 spoos. One spool was about 25 points, 2 spool 50. There we produced 25 points, and so I clicked that through. We lost one, but it means in a matter of 35 days, we made about 200 points times $50. That's about $10,000 following clear-cut rules. And you see the system is spelling out the opportunities. You can learn with us when to trade and when to not trade them, because you see here first leg down. We show you all that in the mentorship, but this is in particular for the bigger investor, so that you have a clear-cut mind of what you do. Always these red lines on the chart would be your trailing stop, and here it's a blue environment goes up, red environments go down. Yeah, so clear-cut example, we want to trade by rules, and we also specify them with you. Yeah, rule-based trading means we write together with you a business plan where we spell out all the situation, top line, signal, red and blue. Where's your entry? Where's your exit? What are your targets? How much time for the trade are you associating with? And what you do if that time is over. Yeah, so that's what we can do for you to carry yourself forward, defining the basically the asset classes you want to trade, and we work with you putting unlimited, no, we put limited risk, because long stock in IRAs, short puts, short calls, this is all unlimited risk. We rather want you to trade for day trading. It's simple. There you have a limited risk because you have no gaps. Covered stock makes a lot of sense, option strategies, future strategies, and hedging. So cover your entire account in a good hedge, and we show you how you can do that so that you can sleep well. If a next black swan effect comes into play, something automatically will happen to protect your assets. And with that said, let me just move my little cursor up here. We have plenty of examples. I click a little into the option trading because it offers you nice risk limited trades. Yeah. And you only can lose what you paid as a premium. You can do longer term or shorter term strategies, but there's a lot of details to be covered, and we are here helping you to cover those details and to learn how to apply all of them. When is an option over or underpriced, you don't guess. You do it in relation to the spool. You will know which strike price you buy, how much time you will associate, and that gives you a lot of examples. We had here a client who came to us, wanted to make 2,500 a month. We always quarterly update. And here you see in the trading chart shortly, the challenge was when you want to invest 80% and you risk 3%, that was the agreement, then it associates 26 trades per month. But is it normal always if you trade options like that? Yes, but in stocks or in futures, you're not going to invest that heavily. But here you saw it was possible working with the clients. I just listed all the different trades and summarized them. Instead of 2,500, the client made 10,000 in average, or 64,000. They paid for the program, definitely. And the key was 68% winners, 32% losers, but that's not the only point. The key point was the winners were 28% higher than the losers. And that's the first half of the second year he's trading with us and with our system moving forward. Here's a trade from yesterday. You see, we automate everything. I didn't have to touch any of those trades. They all auto-fulfilled themselves. And if you are holding more than 125,000, we encourage you get portfolio margin, and we help with that. Why? Because if you buy a stock at, for example, $100, and then on $100 stock, you have a SPOO, an expected price move of 5, the expected return is 5 to 10%. But if you get shown how you can change that, you change your game. It means we take 20% of the SPOO, invest it into a covered put, so that will get you to $92.50. And with that, a $4 opportunity over risk associated to the trade of $7.50 is a 53% opportunity for you. And we want to give you the chance to learn all that in a mentorship, and we give you 20 hours of training. We install everything for you, run you through all of that, and now you want to know what's going to be the price for this. Yeah, Never Lost Trading top line is selling for 9,997, but it comes with 20 hours of training. It comes with the software, only one pay. You get alerts with that in addition. So instead of 3 months, which comes with the program, I give you another 3. I give you an additional indicator for swing trading and day trading. So an additional $4,500 of value. If that's for you, please write us an email, contact us at Never Lost Trading, either through the email or at the office, and we're gonna sit for an hour with you, look at the charts, you can challenge us, and then we add up the good and the bad trades, because there will be trades that don't work. We are not 100%, we are high probability, 65% above. And with that, I have basically exhausted my time and want to see if there is questions and if I can answer those here, because we are now at 26 minutes. We have another 4 minutes left, and I just need to look at the chat box. Is there something that I can answer you with this? Yeah, so write me an email, be part of it, because an hour of training of somebody who trades. And look, before I started to trade full time, yeah, or full term, I had also responsibilities in a different way and manner, but I'm trading since I'm 22 and I always did that. In a certain time of my life, I decided to only do this, but also it got kind of a little boring. And so therefore I said, I want to share what I learned and put together in those concepts and share them with people. And that's what I'm here for. And I don't want to do that with 100. So therefore I limit today what I want to do to 10 for the trade colors, and please to 10 for the Never Lost Trading top line opportunity. I cannot see in the box if there is something which I can answer you. I hope I was able to excite you, get you on a path of rule-based trading, because that's the way to go into the business. That's the way to get everything done. And as I said, you don't have to do anything when you sign up to the program. We program your charts, we program the indicators. It's a one-time pay. There will not be fees after, and we start working together. And you also have a point of reference to check back the trades, because we want to handhold with you in both programs until you are able to get it done. And that's very essential. Look, if you could learn playing golf from a video, we would all be better on the green, but we are not. We'll need to have somebody showing us the critical paths, the critical things to do, and that's what I'm here for, and therefore I'm sharing all these. I learned all kind of candlesticks and all that because that was the only thing available in the past, but at a certain point in my life I set myself down for more than 10,000 hours and started to develop this, separating signal from noise, and this is what I'm sharing here with you today. Yeah, and if you have questions, I'm happy to answer them. If you have questions that you rather want to write me, here's my email, contact@neverlosttrading.com, and I'll be happy to get back to you, because you see some clients that wrote me, can you do me this or that? If it's possible and doesn't take 20 hours to puzzle it together, I'll be happy to do it and give you some insights, but it's better to take the chance for your personal hour, and with that, carry it forward. So thank you very
Thomas,
much, Anna, for having me. Yeah, sure.
Thomas, wait a minute. We have actually an extra 15 minutes.
Oh, we have an
We
extra
we
15.
are presenting time, yes, until 8:45 Pacific, and I will gladly help you with some questions coming in because I see quite a few.
Yeah,
First
absolutely.
question, what platform is better to use? Ninja is okay?
Look, the thing is, our indicators, they are all on Thinkorswim. Yeah. But I tell you one thing, a good part of the clients that we have, let's say the majority trades on a different platform. They look at the Thinkorswim platform with the indicators. They execute their orders wherever they want. We have clients that trade with Charles Schwab, with NinjaTrader, with TradeStation. Yeah, but the indicator will always be on Thinkorswim. It's too complicated to put it on all platforms because there's also that the systems don't congruently do the same because there's little programming differences between a server-based platform and let's say a browser-based platform. Look, Thinkorswim is a browser-based platform. It is real-time on your computer. If you use a server-based platform, then there is a little time difference because it goes back to the server, but doesn't matter. The CME or whatever exchange, if you trade through the NASDAQ, that's all available for you. And with that, you can execute your orders wherever you want to, but you look at the system from there. We don't usually recommend for any of the traders to go like 1, 2, 3, 5-minute charts. And with that, you have enough time to execute your orders. Meaningful time frames, meaningful distances to trade for, that's a very, very, very essential tool that we put forward for you. So therefore the answer, the signals you see on Thinkorswim, that's where we're programming. And the cool thing is with it, it's a server-based programming. So that means you buy a new computer, it's there. Yeah, but also it's a browser-based program. It shows on your computer, browser-based, all the happening real-time action, and we have no lagging, no nothing. Yeah, so I'm using it personally since 2003. Yeah, I think they came out 2002, and so I'm very fit in the platform. But also I like the Ninja platform, TradeStation. We have people, they trade with Fidelity. It doesn't matter to where you trade. The system portrays the opportunity, you execute your orders. And as I showed, we work with buy stop, sell stop orders. And that means on the buy stop, sell stop side, let me just go back to into a couple of the charts. Yeah, so I'll take a daily chart, or let's take this one here. So if you started to trade this, look, you would have gone short here. Yeah, on that, you would have gone short here, and then you would have entered. If you chickened out and say, I'm not going to enter because there's a potential barrier, here you needed to be in the trade. Yeah, and there was no reason to get stopped. Yeah, the price came back a little, but that's also a thing that we teach you. How is the price pattern going through? Yeah, you'll see price patterns are always like this. There's a reason for it. Yeah, because at a certain point in time, institutions will flood supply. That brings the price down, allows them to buy back at a lower price, brings the price down, and then sells them to the next level. And that's what, when you portray that here in the future, that's what most likely we are up to. We might go a little higher, taking out the prior high, then we go a little down, and then we'll see. We see if we go high, or if we roll over, but the system at any point will give you an indication for the direction that you can go with. And we propose highly to have long and short strategies. Here in the example that I gave you, I just said, look, a simple way of your IRA or 401k is to go in and out. I'm not so much a proponent for the IRA, but if you have your money in it, then you have it. Yes, it's a tax shelter, but therefore you have a ton of conditions on the side of what you can do and what you cannot do. A 401k is always good. Why? It's hard to trade, but if your employer gives you 50% of what you put in, that's a nice return from the get-go. And if you then trade it right, because you have a system that supports it, you have an edge. Yeah. Okay, long answer, but I have time. Anna, is there anything else that was on the list? Yeah, I was running too fast because somehow I had myself 15 minutes early to come out.
Thank you for your answer. The next question would be, what is time frame to trade?
Whatever you desire. Look, we look for monthly charts, and so the average time in a trade. Yeah, so depending on those signals. Yeah, so it depends on the signal. So look, this signal says I trade for a 2-SPU expansion, or I trade for at least 10 bars. Yeah, so you have 2 times, 2 different variables. So you say here, I look for a 2-SPU expansion. Yeah, that was a buy signal. Or I look for 10 bars. That would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, but also on the way you get supporting signals that came from here. Yeah, so supporting signals by me. Yeah, supporting signals by me. Yeah, so and you had no stop, because that red thing here, that red line was the stop. There was no stop to the upside, but you needed to be back in the market if you were shy here. So that was the point where you needed to say, okay, the market is long, however frightening it was to be short. And if you traded the short side, also there we had clear-cut opportunities for the direction to go with. And we definitely participated in fantastic short trades, because when you see the time it took to come down like crazy, it takes much longer time to get up. So that means one thing is like falling out of the window, and here you're getting up the staircase step by step. That's always so. Therefore, some traders, they love the short environment, because in the short environment you make money faster, but it's not always there. You need to switch gears, go to a long environment. So these signals here, these signals say 1-SPU should be achieved in 3 bars. Yeah, so that was 1-SPU, even less. Yeah, achieved in 3 bars, and that's if you trade that step by step. So what can I say? There's different summaries. The red signals that go 1 to 5 bars for 1-SPU, 1 to 10 bars for 2-SPUs. This one is mostly for 2-SPUs, except there is a border up to 10 bars. So for every signal, you get a relation for time. 1 to 5 bars. When I say bars, it means a candle. Every candle here on that chart was a wick. Yeah, so if you trade one signal like this here, the orange one, you say, I want to be long between 1 and 10 weeks in that direction. Yeah, and this is your trailing stop here, that red line. When that gets taken, you're wrong. We have environments where there is a shift change and you're wrong. What you take? You'll have to take a stop, or you learn from us. Therefore, never stop loss trading, the way to repair the trade. Yes, so there's methods of how you can repair most of the trades. And that's what we apply with the system, so that we add to it, and we often can make that cash free, so that you don't have to have cash. However, we always want you to be in a situation that you are no more than 80% invested. Yeah, because if something comes up and you need to repair something and you need to have a little extra cash, that was it. In the option trading example, when you pair that with a 3% risk max per trade, so then you need a lot of trades, but it's doable. Look, the gentleman who did all these trades and made 10,000 a month, he spends about 2 hours a trade, 2 hours a day, sorry. But he's available 5 days a week. Is he trading every day? Sometimes yes, sometimes no. It depends on the opportunities. That's a big shift change that I can give you too. If you work a job, you go there and you roll up your sleeve, and it's in the Monday and you want to get something done. Trading is very different. It's all preparation. And if the situation is there, you will take it. Yeah, it's all preparation. You prepare for the situation. If your condition is met, yeah, here, buy stop order to the upside. I want to trade for 1-SPU. 1-SPU here is 12 points on the spider. If they are out, I'm out. Yeah, so if you trade it short term. If you went in here and say long term, I want to trail it, so then you're still in it. So there's different ways of trading, and the system will apply those, and we will work with you and say, how can it be done? And so day trading, for example, we don't like to trade below 20 minutes. The system will be good, but it will be hard for you to make money because of slippage and because of fees. Look what I mean with slippage. If you trade, for example, an ES contract, yeah, $50 for 1 point, just for 1 point. 1 tick slippage on the way in, $12.50, $4 round trip costs, give or take. So that's $16.50 over $50 that you want to make. You have 30% trading cost. So if you are not trading with an accuracy higher than 80%, this will be a losing proposition from the get-go. So therefore, meaningful time frames, and they start from 20 minutes up. And we work with you. We like the 2-hour time frame, as I showed here in the examples, because they give great opportunities for all the asset classes because they are outside the noise. Yeah, so there is a signal and there's noise. If you trade in the middle of the noise, it's much harder to find direction, or you need to high accuracy because your trading costs are so much. Yeah, so if you trade for 1% or less than 1% of cost with slippage and with fees that you paid, then you're in the game. If you trade with 30% cost, you most likely will never ever make money. It's entertainment, super duper. You want to trade for $50 up or down the crude oil, but that thing is like popcorn. You'll be stopped out more often than not by just the natural fluctuation of the price. And so therefore it makes more sense to trade it 20 minutes to 2 hours if you want to day trade or swing trade it, and go with the flow where you can also take a much bigger bite out of it. You saw, for example, on the NASDAQ, 80 points, $1,600 a pop. That's a nice income. If that's too big, the micro account offered $160. And with that, you can tame it when you say $500 is my risk tolerance according to my holdings. So what can you trade? 2 contracts on a stretch 3. Yeah, so this all needs to go hand in hand to make you the trader that you want to be. And this is what I came here to offer. I'll trade every day. I prepare every day, even though I got all these systems in place and all the software. I prepare for 2 hours a day. It's like a pro business. But then I can execute, and all my orders now while I'm here, my orders are in the market. They have their stop or adjustment level, they have their out level. When I showed you that chart from the orders that went through yesterday, and that was just the first minutes, but there were no day trades. I bought IBM the day before, and then I just scaled out of it by pre-programming everything. When you have a system, you can pre-program your ins and outs. When you had a buy stop order here, you can take your exit here, and you had your stop down here where that red line is, and then everything is in place. If the relation risk to reward is too big, above 1.2, yeah, too much risk, don't take the trade. Never over exaggerate. You need to be your own good risk manager. And this is why we work one-on-one, because in 10 years, I haven't had 2 of the same traders in the education. Why? Risk tolerance different, affinity to trading, time you want to trade, or how much time you want to put into trading. Some want 8 hours of screen time, others 1. Some want to trade only 1 time a week. And for every of you, there's a plan. For every of your 401k or IRA holdings, there's a plan. IRA are limited, but you know today, if you pitch for it, you can trade futures from an IRA, but you can't short stock, and you cannot buy short calls or short puts is potentially allowed, but it has to be cash covered in the relation of that. But there's a lot possible. However, on an IRA, if you want to go long with options or short with puts, you can buy puts and do the short side. But you need to know, as I showed you, which strike price, how much time to expiration, how much change you have in a price of the underlying, what's the maximum price you pay, and all of this we pack in a mentorship, like here with Neverless Trading Top Line with 20 hours of individual training. You will learn how it's done. And it's not only that, because we work individually, it means for me, for the first hour or 2, yeah, okay, it's a standard kind of, but then after, everything is tailor-made to your individual wants and needs. Long answer, Anna. Is there something else that I can cover in the last minutes?
Um, yeah, we have only 2 minutes left, and we have 2
Yes.
questions.
Cool.
The first one, do you have some online instructions for us old clients?
Or when you're an old client, write me an email. I get together, give you a refresher, and then you don't need an online instruction. We are the most customer-friendly business. So if you're an old client, write me an email. Tell me when you're available. I'll give you a refresher, and you'll be up to speed. Yeah, because you know sometimes circumstances take people out. When you're a little rusty, I'm here for you.
And you'll be used client.
Yeah, sure.
Can you use on TOS platform?
Yeah, that's where it is. TOS platform, Thinkorswim. That's where all the programming is on. Everything is on Thinkorswim, and you can execute your orders sure on Thinkorswim, which I do, but I also have different accounts. But Thinkorswim is the platform everything is on, and that's TOS. Yeah. Yeah. Thank you, Anna, for having me, and everybody have fun and consider what you learned. Yeah. Thank you very much.
All right, awesome. Okay, thank you, Anna, again for having me. I'm so happy to be here with everybody, and I want to say a big, huge thanks for everybody to joining us this Wednesday morning. Very, very exciting. All right, guys. So today I am going to be talking about 4 ways to dominate the market under any market condition. So basically, you are able to understand what is happening no matter what the market is doing at the moment. And that is really, really important because the market can do some pretty crazy stuff, huh? So we want to be prepared for it. And this way, we could also be able to trade and understand when and how to get into trades, get out of trades, basically everything. So I really love when you guys ask me questions. That's why I am here. It's literally to help you guys. You know, it's all about you. Honestly, the reason why you're all here is because you probably have some sort of a question or challenge, or you're looking for a new strategy. I mean, there's a myriad of reasons why. So I am here to be able to help you guys with all of that. I will be doing a presentation. Now let me get this started. Here we go. This is me. I'm Marina, the Trader Chick. And just a really quick intro of who I am. I am an expat living in Antigua, Guatemala, in Central America. This is my family. And I am trilingual. I am actually a Russian refugee from the Soviet Union. We arrived to the United States when I was only 6 years old. So I speak Russian fluently, but I was raised in the US. So English is pretty much my main tongue, I guess you could say. And I've been a expat living in Central America for almost 20 years, actually. We first lived in Costa Rica and then we moved to Guatemala. So we've been in Guatemala for over 11 years and absolutely love it. I don't know if any of you guys are expats or considering being an expat. It's very, very, very awesome. I don't know if you heard me, but before I became a day trader, I was a fitness instructor and a travel writer. And the main reason why I say this is because a lot of times I get people saying, you know, oh, I can't be a trader. I need to have a financial background. I need to know math. You don't need any of that. And the reason why is because day trading is, it could be simplified and anyone can truly do it. You do have to put in the time. It's not easy, but you can do it. So this is actually, like I was saying, I'm a travel writer. I started a travel site about 12 years ago, and it's still here. You can still check it. It's still one of my online businesses, which we absolutely love. Obviously, at the moment, we can't travel as much, but once we do, everything's going in there. All right. So before I jump into the actual meat of the presentation, the entire presentation that I will give you, and literally it is what I use for my own trading, you could get completely for free at makingofadaytrader.com. Makingofadaytrader.com. This is where you'll be able to see the entire presentation. So today I want to talk about the basics. No matter how crazy the market is, no matter what the market is doing, and no matter what your experience in the market is, getting back to the basics is so important. I don't know if any of you guys have ever heard of these 2 really amazing coaches, John Wooden, Vince Lombardi. You do not need to be a U.S. basketball or U.S. football fan to have heard these people because they actually became quite well after coaching. They were some of the top coaches really in the world and probably the biggest inspirations ever. The thing is with them every year, and these guys, you know, went to the Super Bowl and won NCAA championships. Every year they started with the basics because if you can't remember and get back to the basics in the toughest times, you're not going to be able to make it through those. And that's literally what I love to focus on. That is a game changer, total game changer for everybody for their trading. So I trade off of one chart. I trade this many futures. I want to simplify it completely. I use two indicators. I use my EMA lines and I use the MACDs. I like to keep it simple. You do not need to have 1,000 different indicators to really get into trading, right? You could stick to two, you could have just one. And for me, having the one chart is really important because we do travel a lot. We do travel a lot. So I used to have three monitors and I was completely shackled to my desk. And once I discovered that I could put it all on one chart, it completely revolutionized my trading. So these are my indicators that I use. Now, let's begin talking about the market movement and the breakdown of a trend. Yes, we all know about the trends. We all logistically understand that there are three trends. We have the uptrend, we have the downward trend, and we obviously have the sideways trend, which we logistically understand and we get the concept of it. However, I would say over 90% of the traders, excuse me, lose all of their winnings and maybe even more of the day during the sideways trend. Because if you cannot recognize when you are in a sideways trend and continue getting in more, and what it turns into once you have one loss, maybe even two, it starts to become an emotional trading session and goes into revenge trading. So understanding when these sideways markets begin and staying out of them will truly save you so much money. Why? Because there are three incredibly important positions in day trading. One, know when to get in. Two, know when to get out. And three, probably the most important and undervalued, is knowing when to stay out. I know that a lot of you guys have heard cash is a great position to be in. And if you don't know when to stay out, you can enter bad trades and end up losing way too much money. So let's just do a really quick review of an uptrend. Uptrend, obviously, each pivot is higher than the other. What are pivots? It's where the market goes up and then retraces from these little things. It's also called a bull market. It's called going long or buying long, whatever you want to call it. This is what it is. This is a trending, upward trending market going long. Then we have the downward market, the downtrend, which each pivot is lower than the pivot before, right? What is it? It's selling. It's going short, right? It's shorting the market. These are crucial. The bear market, that is what you also know. It's all the same thing, right? We also have overall huge markets, and then you could have mini trends in between that don't last long. But if you are a day trader and somebody like me who I scalp, I only go in for one point, I go for really quick trades. I could easily monetize on one or two amazing setups in small mini trends. All right, so let's dive deep into what is a consolidation area, transition area, the sideways market. What are these areas called? They're called indecision areas. They're called sideways areas. They're called exhaustion patterns. I mean, the list goes on and on and on exactly of what they are, right? But they're all the same thing, channeling market. This is what they look like. Basically, it's literally where the pivots bounce in between two areas, the resistance and the support area. When they're bouncing in between both of these areas, this is a consolidation area. It is an area of indecision. So it's really important if you just think about yourself, if you think about what is an indecision area, right? Do you really want to be in an area of indecision? And I'm going to use this analogy, which I use for breakouts as well. Imagine you guys are, let me just see if I could have a better idea here. All right, imagine you guys have to go and see one of your friends that lives north of you, right? You get in your car, you are totally confident, you know this road, you've been on this highway 1,000 times, and you're driving, right? So you have all this energy, this strength. So if I was to put in a trade or put in a position saying you're going to hit 2 miles in that road or whatever, it's a pretty good analogy that you're going to hit that target, right? Now imagine you're driving and all of a sudden there's a construction area. Okay, now what happens, and all of us have been in construction areas, what happens when there's a construction area? This is what happens in my mind. First of all, you have to go on a detour. My mind starts to go into total stress mode. Okay, what if they forget to continue with the detour signs and I don't know where to go from here? What if what if they stop the signs and I get completely lost? Oh my God, now I'm in total indecision mode, right? I don't know where I'm going. I'm not feeling confident anymore. Do you want to be entering trades when you are in that state of mind? That is what a sideways market is. However, a sideways market isn't only that indecision area, that what's the market going to do or not. The other thing is that happens in these areas is trading is mental. It's very mental, right? No matter how you look at it, it is probably 90% mental, 10% actual technical skill. Because I always say I could teach anybody to trade. Anyone could really learn to trade, but it's what your mind is going to do. It's going to make the difference, right? As in with the same with sports, it's so mental. This is what happens when we have this kind of an area come up, and why the majority of traders end up in these areas. So when you're having a pretty strong moving trend, for instance, in this case, it's moving up. Let me just be specific. For day traders, we don't care if it's moving up or down. We make money either way. Okay, now it's been moving up all day or all morning, whatever your session is, and all of a sudden it starts to go sideways. This is when the mind starts to take over and the stories start to completely invade your brain. What happens? This is where you start to, if you are a trend is my friend type of a trader, you're going to be seeing this and be like, you know what? The market's been going up all day. I'm going long. I'm going long because the market has been going up. It's going to break out and it's going to continue going higher. Or what if you're a contrarian trader? And I was a contrarian trader, meaning that I'm always looking for that correction, for that retracement. So if I'm seeing this, I was saying to myself, you know what? The market's been going up all day. It's got to correct. I'm going short. It doesn't continue going up that much. Both of those stories are total lies. They are absolutely untrue, and they have nothing to do with what the market is going to do. Because here's the deal: the market is going to do what the market is going to do, and what we as individuals, retail traders, have to know is we have to understand how to read what it's telling us. And when now today I am listening to the market, the basic language of the market, and it's telling me that it is in a sideways market, and you do not want to be in an area where it can either continue down or transition, because we always want to be on the right side of the market. Okay, so this is a perfect example. Trending market down, consolidation, where the pivots are starting to bounce between two areas or hit against one certain area. And then in this case, it transitioned and changed direction. But what if I was the trend is your friend type of a person? I would be going long, a short, and it would lose. I would be stopped out because the market transitioned. Okay, we could also have these areas, they could be small areas with more of like, I call them interim areas, but when you're in the live market and it's all you're seeing, again, it's an indecision area. I could have been totally stopped out here if I continued going down. All right, so this is what they could look like, and they happen all the time. So we as traders do not need to be in trades a gazillion times. Actually, pro traders maybe get in one, two, maybe at most three trades per day. Because as much as I hate this analogy, and I do not condone hunting, but think of yourself as a hunter. If you are going to be a big game hunter, are you going to go and shoot every little prairie dog and field mouse? No, you're going to wait for the big game. That's how traders are. So when we're stuck in these types of sideways areas, emotional trading, revenge trading can totally take over, and you spiral out of control. And that's when you become trigger happy and over trade as well. I actually have this challenge with my traders: go one trade per day. One trade. It's amazing how much you start to really filter out that on so-so trades versus that one awesome trade. And that will change your life. And the majority of the bad trades that are taken are usually in sideways markets. Okay, so knowing your areas, respecting them, because the market respects areas. It respects support areas, it respects resistance areas. And if you do not have those areas drawn in and recognized, you will be losing. To me, support and resistance areas is literally the same as putting on my seatbelt in the car. I am not protected if my seatbelt is not on. I am not protected if I am not seeing where there's a support and resistance area, because it doesn't matter how strong of a move it could have. If it's a strong area, it could just hit dead on. Right? Have you ever seen those test crash dummies when they're driving 100 miles an hour and hit a brick wall? That's how strong resistance support be. But if you do not have it drawn in, and if you're going in for trades thinking, oh, with this, I have a really strong move, you will end up losing. So you need to have protected. Okay. Sometimes it could be wide tradable channels, which could be good if you understand the width. For me, it's usually 10 to 15 points. But if it's narrow, you do not want to be in a narrow trending market. I mean, a narrow channel, because that could just be totally up and down. So what's a resistance? Resistance is the ceiling of the market. It's the ceiling. It's when the market has hit at least 3 times, right? Once I see it hit 3 times, I know that this is an area to respect. Okay. So when I see that, I already am starting to draw in my areas. Now, like, because I am a scalper, I only go into the market maybe for like an hour per day. So for me, an hour session is my session. It's a long time. This particular market demonstration here, this is about 1 hour. And as you can see, there were several trends. However, every time it tried to go down, it failed, it continued up. And guess what? It respected the area. And sometimes these areas could last for several days if you are on a longer time frame. So it's really, really, really important to have these areas drawn in. This is what a resistance looks like. This is a resistance area. What's a support area? It is the floor of the market. It is the floor. Okay, so again, it's where the market could hit several times. I always look for at least 3 hits before I make it a true area. This is that area. It's starting here, right? Support area, the floor. And if it's a strong support area, it will actually change direction. So you have to be really, really, really on top of understanding that area. Support area, the floor. So this is a narrow, ugly, ugly channel. Look at this indecision, this choppiness, this grindiness. So if you don't have this drawn in, you could accidentally be getting in, and what happens? Revenge trading, over trading, losing a lot of money. There is not a single pro trader that will tell you that over trading is a good thing. Not only will you get, lose out on commissions, but also it just doesn't work. It does not work. All right, so look at this one. Okay, look at that ugliness in the market. This is those sideways, ugly channeling markets. And they happen all the time, but if you do not have this stuff drawn in, you're going to be getting stopped out. You're going to be losing your money. Okay, let me just see here. Yes, over trading, Jeff, it is a thing and it is bad. So honestly, Jeff, what I recommend, and this is what I do with all my students once they already have like the strategy and their setups, look for the one trade. Jeff, this is literally a challenge that I call the one trade challenge, 1 trade per day challenge. It is amazing how much you are going to start to filter out once you are only permitted to do 1 per day. Some of my some of my students have tried this for 3 to 4 weeks, and it completely changed their habits. And now they go in 1 or 2 trades, but they recognize the powerful ones, because now you'll be like, you know what? No, I only get 1 a day. I'm not going for just this one, right? Plus, you also have to have a very strong strategy. Like for me, if I see a red light in the market, it's like sitting in my car and, at a red light and being like, well, should I go or should I not? You have to know when it's a red light. You have to know when not to enter. Okay, so it's one thing already seeing, the support in the area, the support and resistance areas already happening and the channels already happening. But how do you spot it in the beginning? And this is the key. This is the golden, for me, this is like the telltale signs. This is my roadmap, period. And it is reversal patterns and divergences. I don't know if any of you guys trade reversal patterns. This is life changing. I mean, once I recognize them, it will completely revolutionize your trading. I promise you. And it's free. It's on any single chart. It does not matter which market you do. It is not a software you buy. It is not a flashy indicator. It is right there. This is what the market is telling you. Everything can be done off of your platform. Okay? Every single one. What is a reversal pattern? They are either a double top or a triple top. You see where they come up perfectly? It's either the M or the W pattern, whatever you want to call it. This is a reversal pattern, or the head and shoulders. Once you start to spot this, this is usually also the beginning of a support area or a resistance area. In this case here, all right, this is what a reversal is. This is what a double bottom looks like. It's a perfect, it's literally hitting now with divergence. And this is for me, once I already see a reversal pattern, I'm already not touching the market. But when I see a reversal pattern and the divergence, I don't come near it. What's a divergence? Do you see at the bottom? Those are my MACDs. I find the MACDs to be the least lagging indicator out there. They are awesome. It is really showing you where their weakness in the market is starting to happen. And in this particular case, that is exactly what is going on with divergence. The market is headed down. And if you can see, the pivots here are identical, but here at the bottom, this one's much less. So once I start to see that, that's it. To me, that is really strong divergence. Right here, look at that. Double bottom, massive divergence, massive divergence. I love divergences. To me, they are everything. Triple bottom, triple top, right? Look at these divergences. All right. So before I put it all together, um, oops, hang on a second. Okay, so, okay, putting it all together. So, question here. What is one of my favorite trade setups? Well, I'm actually going to talk about two of them. One is my breakout trade, and another one I call this initial trend trade, like the initial reaction trend trade, because the most strength in the market is when it's either just changed direction or just broke out. So I'm going to be talking a little bit about that. So breakouts, we all know about breakouts. Breakout trading is awesome. But if you do not have your support, if you do not have your resistance areas drawn in, how can you possibly recognize it happening, right? So how to spot a breakout. So I'm going to go back to that analogy of visiting my friend. Okay, so I have, like I said, I'm going north to visit my friend. I get in my car and the highway, I recognize that I'm driving with confidence. That's also the beginning of a trend. That's someplace that you would be entering. And all of a sudden, there's that detour, there's that construction, there's that total stress, doubt, indecision area. Okay, you're following signs, you're hoping that they didn't forget about the signs, you're hoping that they reopen the same highway because that's the one you know, not some side roads. You're also, like all this indecision. And all of a sudden, construction worker says, hey, guess what? The construction's over. Here's the way back onto the main highway. Boom. Guess what? What are you feeling at that moment? Total confidence because you're back where you know where you are and you're breaking out of that. This is a breakout trend. Breakout trade. It's when you continue in the same direction with strength. And that I see with my MACDs, I see that strength here. This is that breakout. Okay, again, it could be done either going up or going down. You do not need to only go up for day trading. We make as much money headed down as we do headed up. Okay, so breakout, resistance, boom. All right, this is what that breakout looks like. Breakout trade setup. My favorite trades. Boom, look at that. All right, you're in a total breakout. Boom, you break out. So I use my EMA lines. You see these 3 EMA lines. Those are my indicator. I use them for where I take my trades. It's one thing to see a strong candle or a strong bar and be like, oh my God, it's strength, I'm going in. Absolutely will never work because you need to have real solid place to stand and take your trade from. And the same with a target. Targets are as important as stops. By the way, they are as important. Now, target. So imagine yourself as an archer. Like those people with the bows and arrows, a competition, they always have a place where they stand from and they always have a target, a bullseye, right? So That is the exact same thing for breakout, for where I take my trades. It doesn't matter if it's a breakout, it's wherever I end up looking for that specific trade that I look for. In this case, that is exactly it. Here, you see, I have to have that strong run, retraces here. Look at that beautiful movement with the MACDs, absolutely no divergence at all. Okay, let me see if there's questions. Yeah, I'll show you a recent chart. It doesn't matter, Jeff, if it's recent or not. These are patterns that are on any chart, any time of the day or night. It's patterns. That's the beauty of it. It's not price. What is the actual price? Okay, so another bonus trade that I have is my initial instant reaction trade. Why do I call it this? So again, here's a strong resistance area. Just because it's been going up does not mean it's going to continue. But once it changes direction, retraces to my area where I take my from, that's where I enter. All right, guys, remember everything I just showed you is completely free in makingofadaytrader.com. You could sign up. I'll send you the whole thing right here. Okay, Joe, are you using just the MACD line for the signal? Both. It's price action and it's the MACDs, but I can never do one or the other. It has to be both for me. What type of candles am I using? So I'll use a tick chart. I will show you guys right now live analysis. All right, so this is the live market right now. This is what's happening right now. Can you guys just throw me a yes if you are seeing my chart? Please let me know if you guys see my charts. Okay, cool. So this is my chart. I trade the ES mini futures. So the E is literally the S&P 500 index on the futures market. I personally love it because I could just go in with contracts. I am a scalper, so I go in for points. So what do I look at? Let's look. This is a perfect example of a very, very, very strong resistance area, right? Look at here. Super strong resistance area. The breakout here is still not that strong for me because it pretty much hit this exact point, right? So I do not see a breakout trade forming just yet. Even though this is moving up, I want to see that breakout because what happens is you could have a fake out breakout. That means that the market could break out and then head right back in. So you need to have that extra confirmation. So this is a very strong movement right here. This is a strong and ugly sideways market, right? Bouncing back and forth. It's very narrow. It's only a couple of points, maybe 4 points between each here. Hang on just 1 second. Okay, so let's look here. This is a good example of another resistance area, right? And this one I would be totally looking into. So remember, everything is done in the live market. So I will start to probably look at the area around here. This is where I would start to recognize that there is a strong area, right? We have 1, 2, 3, 4 pivot hits and then 5, 6 and continues, right? Once I see this, I already start to draw them in. So resistance and support areas, they do move and you have to be flexible. Obviously, if it's 10 points, it's a whole other thing. But if it's only a couple of points, I move with it, right? Like right here, I would just move it a little bit there so that it's hitting because it's still hitting that same resistance area, right? Oh, but wait, is it starting? No, I'm also seeing massive divergence happening here. This is going nowhere, even though this is going a teeny bit up. That means there's not a lot of strength in the market, right? And I could just kind of move it up, oops, up because it's totally flat. It's totally flattening out here, not going anywhere. And this is, oh, I don't want to be in this now. It's not going anywhere. And now it's totally losing strength. This went below the 0 line here. It's just boring. Like, and I know that in this particular kind of a market, patience will win. You do not have to be in every 5 seconds. You can't for that beautiful setup. Guess what? This is hard-earned money, you guys. This is your money. Imagine you're to go. You know what? Here's a good example. Imagine you are shopping for, I don't know, a beautiful dining room table, right? And you're about to spend $5 grand on that table. Are you just going to spend $5 grand? I think that is kind of okay. No, because you're like, what? This is going to be my house. This is my world. I want to find that perfect table. Why not with the trades? Why are people just throwing, actually not throwing, donating their money to the market? Because it's a story that is being told in their head saying, I have to be in and out all the time. No, you need to get in that great trade. You need to get that beautiful dining room table that you're going to be proud of, right? Oh, wait. Now all of a sudden, everything has crossed over. I have now shifted direction here. It did not go anywhere. Now it's starting to show me a little bit more strength. But it didn't go anywhere. Didn't go anywhere. We're back in. No, not a trade I would be interested again. Again, you have to really understand this is hard-earned money. People, anybody could enter the market. That is the sad part about the markets, right? The financial market is that there's zero barrier to entry, and anyone could just get into the market. So you have to have a strategy. You have to understand. You have to know when to stay out. You have to know when is the ideal way to enter. Okay, so I would not be anywhere near here. Okay, wait, oh, that's it. Now, do you guys see that breakout? Do you see that breakout? Do you see the difference now? Look at this movement. Look at this movement. Guess what? This is exactly where I will now be entering the market. So I'm going to pretend this is my order waiting, and I am going to be moving it right to here because this is where I enter the markets, and boom, I got in. I am going for 1 point. 1 point is all I look for. So my 1 point is right here. Guess what? I would have hit my target beautifully, beautifully. And if I didn't hit it then, I would have hit it again because I also have a 1 point stop. If you guys don't have a stop in, you stop right now and just give the money to the market because you will lose everything. There is no such thing as a mental stop. There's no such thing. It will never work. The ego will always win. Boom, I got in my one trade. If you go in with 10 contracts, that's 500 bucks. There is no slippage. Slippage only works for traders that are amateurs because you need to have an order waiting. And my order waiting is all the way down here. Once I see this movement, I have my order waiting moving, and I tell the market where I want it to enter. And this is it. This is my breakout trade. This would have been an absolute ideal, perfect breakout trade for me. All right, so let's see some other movements here. Here's another absolutely perfect breakout setup. All right, look at that. Perfect setup. Here's another. So I'm seeing here, I already have these 3 hits, right? And then we have this area around here. Usually my resistance area is about 1 point thick. Okay, I'm looking to see what's going to happen. And now I'm actually starting to see that there might be an area forming. No, it's a total support area that has just formed here. All right, look at that. Total area forming. Oh, I moved here. Oops, hang on a second here. Okay, I make this bigger. Oh, look at that. Look at that breakout. Do you guys see that breakout? Boom, look at that beautiful breakout. Look at the MACDs. Look how they've totally just raced up. Boom. So once I see that, guess what I'm doing? I have my order waiting right here, and I'm starting to move it in right here because I know it's going to continue, and it continues. Where I go, I don't know, but I know that it's going to be on that first hit. Once it hits there, okay, I got to move with it. It hasn't gone yet. And right there, boom, look at that. However, I am not going to be going in anymore. Why? Because I truly believe in divergences. And right now, guess what? I had a divergent setup right here. Even if it continued, I probably would have been stopped out because I go in for 1 point. And I probably would have been stopped out, but I was warned prior. with that divergence, and I stay out of divergences. Divergences will save your lives. Okay, guys, let me know if you have any questions. Here's another excellent example of breakouts, right? Right here, look at that. Breakout, boom. I would have been all over this particular trade right there. Okay, the breakouts are truly some of the best trades out there. But if you do not have your areas drawn in, how are you going to know? How will you know the difference, right? Okay, do you do trailing stop? I do use a trailing stop if I go in with more than one contract. Guys, do not go in with 10 contracts if you've never traded or you are not trading successfully and do not have a back tested strategy. So I've been doing this for over 8 years. So when I enter, I go around 10 contracts. I always have my first target is 1 point and my stop is always at 1 point. So I will put 2 contracts at the first target, and then once it hits it, I immediately put in a stop. I immediately move my stop to a in, and my second target is 2 points where I have the rest of my points there. And that's it. What else do you need? Greed is a horrible thing and it will get you all the time, because if you're not making the right decisions, pretending that you're going to go for the $1,000 per day, it's only a pretense. And unfortunately, day trading can really give you those high hopes, right? And that's what we want to stay out from. So let's see what the market is doing right now. Not a whole lot. It's kind of just hanging out right there. Right now, massive divergence, not something I would be interested in. Okay, do you use, no. So let me talk about my charts that I do use. I use the tick chart. Do you guys see right here, the 610 tick chart? So what are tick charts? This is not anything unusual. It is found on any platform you guys use. It could be on Thinkorswim, Sierra, Ninja, TradeStation. Tick charts are common. What are tick charts? So I personally use 610. That means for each bar right here, you see each candlestick, it has 610 transactions. When I first started trading, I was having 10 indicators, 3 monitors. I literally was going into massive stress mode, analysis paralysis. So my goal is to remove as many indicators as possible. And what I did is I removed the volume indicator. So what is a volume indicator? First of all, it's a lagging indicator. Yes, it's showing you overall how much movement, how much volatility is happening in the live market. However, tick charts show you in the moment, real time. And right here, you see where it says ticks remaining? I am seeing the amount of transactions remaining per bar. So if they're moving really quick, guess what? That means there's a lot of volatility. There's volume. It is the most fun to trade then. But what if you're in a 5-minute chart and the market is moving like molasses? You want to shoot yourself, but you're not seeing in real time what's happening. So that's the difference. I find tick charts to truly be so much easier to work with, right? When do you enter divergence setup? There's so many ways to explain that. It's kind of like you're asking if I was a knee surgeon and you're entering in the middle of an operation and saying, okay, so when are you going to take out the kneecap? Well, there's all these other things that you need to look for. So just answering that is really difficult, because if I could answer that, everybody would be doing it, right? There's a strategy to it. I look for, when does that divergence break? I look to see if my MACDs are high enough. I look to see if my price action is going to go back to my EMA. There's so many things to it. Okay. Renko charts. Instead, do you use, no, I use tick charts. I only use a tick chart. Tick charts are my favorite. I love them. They are the most accurate as far as in real as happening and the amount of volatility that is going on in that moment. Okay, does that make sense? Let me know if you guys have any other questions. And the market is now starting to crawl up. However, I personally am not into it. Too much divergence. That means it's also starting to lose that, the market's been trying to get higher and higher, right? We are at absolute incredible highs lately. And you're going to get that. You're going to get like that indecision, that fear of going too much higher. You're going to have that slowdown. That's a completely normal thing. All right, guys. So as I said, you could get everything that I just talked about on makingofadaytrader.com. You will get the actual presentation, and literally it's the cheat sheet that I use for my own trading. Like I use those patterns to see about my own type of trading, and it really makes a difference. So I use EMA lines, not MA, Richard, and I use the 20 period, the 52 period, and the 135 period. Where do I get ticks? No, it's just a tick chart. Literally, it's like minute charts, tick charts. So if you just put in ticks, ticks are automatically the transactions. That's what ticks represent. So it's not about like right here. Let me show you. When you go in and you want to do time, hang on. You see, you have 1 minute, but then you could set up to a tick chart. So in NinjaTrader, I don't know how to use others, but for instance, in NinjaTrader, I don't know, are you guys able to see what I just opened? You could have right here, the period of the 610 tick chart once I choose the tick chart, right? You could definitely choose, hang on a second here, let me get out of that. You could definitely choose 1 minute, but then you won't get any ticks. Okay, does that make sense? All right, guys, let me know if there's any more questions because it is almost time for me to wrap it up. And again, you could also send me questions to thetraderchick@gmail.com or thetraderchick.com. Makingofatrader.com is where you will get this presentation. Again, completely free, no strings attached, nothing. Okay, oops, what did I just do there? Hang on one second. All right, guys, and thank you, Anna, so much again for inviting me. It was really a great pleasure to be with you here, and thank you all for actually taking your time out to be here with us. And thank you so much. If there's any other questions, let me know. If not, I will see you at makingofadaytrader.com.
Okay, let's get going with my presentation. Again, thank you, Anna, for having me. There's a lot of people from my crowd, my what do they call them? My tribe here with this presentation because it's a little bit different from what I usually do. But really, it's a dovetail on the mental and emotional issues. So many traders out there have pretty good trading plans. Most of them are much too complicated as far as I'm concerned. And I say that because the success of a trader is not only based on the credibility of their trading plan, but their ability to follow that trading plan. And when you have a complicated trading plan, things can go wrong very easily. Too many things to doubt. Too many, if you have 4 or 5 hoops to jump before you get into a trade. Many times, what happens is after the 3rd hoop, you're anticipating the 4th hoop, and maybe you get in a little bit early or whatever. When there's too many things to think about, that's where traders go wrong. And so I believe the difference between a good trading plan and an excellent trading plan is simplicity. And I'm going to stress that a little bit in this presentation. But let's get to the 7 beliefs that hamper trading success. Does that sound good to you? Just want to see, again, that's kind of a bait to see. There's James. Hi, James. To see, hey, Jeff, how are you? Thanks. Okay, let's get to the presentation. These are 7 beliefs that hamper trading success and how to change them. I'm going to quickly do some slides, and then we're going to go to some charts. And then at the end, I want to show you the simple trading plan that I'm going to describe to you. I'm going to apply it to whatever chart you want me to. So let's get going with here. That's me. That's the good-looking version of me when I wore suits and jackets and shirts. There's no tie there, but that is I guess I'm looking at a pile of gold or something, or pointing to the pile of gold. But with COVID and actually being a trader, you're in the house all the time if you're trading from the house, as I do. So I've been doing this 40 years. Actually, ever since 1993, I've been trading out of my home or home office since then. So a lot of that time. So I've got some experience trading, and what it's come down to for me is helping traders to be disciplined in their trading, but also to apply simple trading plans. In fact, I've spent really the last 2 years of my professional life developing simple trading plans. I'm going to show one of them to you today. I guess you got to call me an author because I've written a couple of books, and I've written one on how to build and run trading plans. I've also I got a coffee table book that's more of an inspirational book that can help you to kind of get off the dime every day if you're feeling a little slow. In fact, I used my own book today. I played tennis this morning. I wasn't playing very well today. I came home a little draggy. Before I sat down and started trading, I read one of my own quotes. I guess that's a little self-serving, but so I've got a couple of books out there. I think you'll enjoy them, especially the one about trading plans. I'm a former CTA, commodity trading advisor. I've managed millions for largely money clients, and so I've got experience not only trading my own money, but and instructing others on how to trade, but also trading for other clients with their money, which can sometimes be the most stressful thing of all. I've run in the 1980s, before most of you probably were born, maybe some of you, I ran one of the largest, if not the largest, option firm in the country. I had 60 brokers under me in the home office, and I trained managers to open other offices. Options were kind of the Wild West then. This was before exchange traded options. Payne Weber saw me. They hired me as a future specialist for them, and spent a couple of years with Payne Weber until I realized that all they wanted me to do was generate commission. And I'm not saying that in a bad way, but that was the way of transactional firms. It still really is. So as an individual trader, I think you've got to learn how to do it yourself. Now, of course, the cost of doing business is not great. We used to have to pay $100 a round turn when we bought and sold one gold contract in the futures market. Now there's some companies that do it free. But probably the most important thing about my background is that I'm married to a subconscious trainer, and not everybody can say that. This woman turned me from, I wouldn't say I was struggling, but I was a trader and broker that really made a lot and lost a lot of it back, made a lot, kind of back and forth. I was profitable at the end, but not nearly what I could have been. My wife stopped me from making crazy mistakes with her subconscious trainings. She would do it for me one-on-one. Years later, I said, hey, why don't we just put this in hard form and give this to other traders? And in 2000, we started the Disciplined Trader, where we helped traders with their mental and emotional issues using our stuff. But that's another story. That's the main story, but that's not really what I'm focusing on today. I want to go through these 7 beliefs that I believe, I guess the 8th belief is I believe that these 7 trading beliefs, you really have to inspect them a little bit before you start believing them. Okay, the belief number 1 is that if somebody claims to be a successful trader, they're a successful trader. I don't the truth is, I don't believe that you have to be a successful trader in order to teach somebody how to be a successful trader. There are a number of very valid trainers out there, and some of them are very big names that I've worked with that do not trade themselves because it's just not in their nature. They're more analytic, and if they could follow their own trading plan, they probably would. It's just that there's just too much that goes into following a trading plan as far as the baggage that you take with you as a trader, and without things like the subconscious training and EFT, emotional freedom techniques, some of the things that we use, you're not going to be successful. So I just think this is you got to watch it, and just because somebody shows you a track record in a short period of time, or even a long period of time on a particular trading plan or whatever, it doesn't mean that you can take that trading plan and use it, because not only is there the mental and emotional issues involved, but there's also the style of a trading plan. Just because somebody is making money with a trading plan, it doesn't mean that you will. And so you need to, that's actually one of the beliefs that I'm about to, but all these kind of beliefs kind of dovetail a little bit. So, Marina, who you saw before, is a type of trader that is in and out very quickly. and it doesn't leave a trade on for very long. I'm more of a trader that lets things go a little bit further. I'm willing to give back a little bit more than Marina is willing to give back, but that is in exchange for a bigger haul when I do make a trade. So you have to first identify who you are and how you trade before you can actually think about being a successful, consistent trader, because that's really what you want to be. And when you can get yourself up to making about $5,000 or $6,000 a month, sometimes even depending on your lifestyle, then you can consider leaving your job or leaving something else. But you have to be consistent for like a year before you can let things go. And even then, it's always good to have multiple streams of income. Let's go to belief 2. You've got to fail before you succeed. You know, all these beliefs have two sides to them, and that's what I'm really trying to point out to you. Sure, you've got to, maybe you have to fail before you succeed, but I don't think so. I don't think you have to fail a whole lot before you succeed. I think it's good to feel the pain. You know, as a kid, if you put your hand on the stove, that's all you need to do one time, and you'll never do it again. It may be the same way with trading, although I have seen traders blow out their account over and over and over again, and that is because they pay little or no attention to the mental part. And even though they're going to new trading plans, it really is not helping them because they still haven't mastered the mental and emotional part of it. And I think you all can appreciate that. Do you see what I'm getting at with that, with the mental and emotional? Just give me something in the question box so that you're, I know that you're still with me. I see my wife used a yardstick across the back of my head. Yeah, that's okay. Are you with me on this? Shall we go to belief 3? Okay, here we go. Let's go to belief 3. You have to know everything. There is probably the biggest, you know, analysis paralysis. I think, in fact, I heard Marina say that once or twice in her. She says that a lot, and it's true. If you spend a lot of time, you've got to get in there. You know, when I ran a very large option firm, and they put me in, and Payne Weber hired me, I was helping traders to trade more effectively. And what I noticed with that was that the traders who had complicated trading systems and always went back to simulated trading in order to test certain new issues, which is important to do, but that's all they did. Every time they made 1 or 2 trading errors or had 2 or 3 losses in a row, they would stop everything and then manage their trading plan. I think you've got to trade small. Most traders are too exposed. You have to keep your position sizing down, and you have to trade smaller lots, because that allows you to release a lot of the tension in your head. Because I think if you've been trading markets recently, you know that even a small position, even a micro mini S&P position is going to can make you a couple of $1,000s a day with the couple of kind of moves we're having. So small is good when it comes to trading. You know, I've made it a rule a long time ago never to expose myself as much as I can. In other words, I can always put on another position if I want, but I'm never 100%, because it kind of keeps me in mental control. You don't have to know everything. You've got to get in there, and you've got to trade at a small level and be able to adjust at that small, and because if you're not taking on enough trades, it means that you're not learning enough about trading and your trading system, and therefore you can't make as many adjustments as you want to make in order to improve. You don't want to make an adjustment based on just 1 or 2 instances, but if you see a way that you could have stayed in a trade, and you see that 20 or 30 times over a 2 or 3 week period, then you can step back on the weekend. Now, while you're not trading, and look at that, look at charts, back test, and then forward test, and see whether you need to change your trading plan. I'm very slow in changing my trading plan. You don't have to know everything, but so I guess what I'm saying here is that don't let analysis, you'll never have there's no perfect trading plan. There'll always be losses. There's no such thing as 100% winners. So trade on, learn from your trading, trade small, and continue forward. Okay, belief number 4, you need to be good at everything. You really don't need to be good at everything. You need to be good at a few things. Okay, you need to be good at because if you're good at everything, sometimes you believe that if you're good at everything, sometimes that complicates things because you want to use everything that you're good at. Choose the things that you're best at. Take your strengths and amplify those. It's much easier to amplify a strength than it is to turn around a weakness. And I'm not saying you shouldn't turn around a weakness, because if you lack patience in your trading, for instance, most trading plans, just about all of them, require a certain element of patience. If you don't train your mind to be more patient, if you don't train your subconscious mind to be more patient, you're not going to be able to take yourself from impatient to neutral. Okay, you don't have to have a patience of a saint. You just can't let lack of patience get in the way. Now, if you're somebody who is good at making decisions and quick and good to pull the trigger, then you need a trading plan that gives you a nice bump once you get into a trade. This is the kind of person that I am. So most of my trading plans the triggers reflect a moment in time where I'm expecting a rush. I'm not looking to buy against a support without confirmation to the upside. When I get that confirmation to the upside, it's got to be a certain type of confirmation. I'm going to show you that in a second, so that it triggers me into a trade. Okay, so you don't have to be good at everything. Choose the things that you're best at, and develop a trading plan, or emphasize the parts of your trading plan that emphasize who you are as a trader. Okay, that's the way. That's the backside of being disciplined. If you're trading a trading plan where you're good at things but not great at things, then you're going to be struggling to keep that trading plan intact and to be disciplined to that trading plan. If you stick with things that you're naturally good at, this is why when somebody has a great trading plan and shows it to you, then all of a sudden it's not working for you. Wonder why? Why can't I do what they're doing? Because it doesn't match who you are. When I develop a trading plan, I'm going to show you one in a second. I include nuances in the trading plan. I give you the basic rules, and then I give you the nuances. But those nuances are optional nuances to fit your personality to improve the trading plan. It's not going to improve the trading plan for somebody who it doesn't fit. Okay, I can't emphasize that more. And nobody talks about this. I don't know that most people even understand it, even many traders out there. Okay, belief 5, you can succeed on your own. There are very, very few traders who can succeed on their own. I think when you've got to find somebody that makes sense to you, to guide you, and you've got a series of traders in this presentation. I know Marina is one. I haven't looked at the others, but we have our own styles. We have our own ways of presenting, and if you can believe in the way I'm delivering my message to you, if it rings true for you, that's the beginning. You need to find somebody to trust. You need to find somebody to guide you through and understand your own strengths and weaknesses and guide you through, whether it's through coaching, whether it's through coaching classes. For instance, in my simple trading plans, we have a monthly get together where we share our experiences with running the plan and so on. You need camaraderie and a recognition of finding those matches for yourself is very important in keeping your emotional level down and your confidence level up. Can you succeed on your own? Very rarely. Is it much easier? Even those, let me put it this way, even those that can succeed on their own can accelerate their own success by finding somebody to show them the ropes that matches you, okay, that feels good to you. Okay, belief number 6, the markets are in control, not you. It's really the markets will do what they want to do, but it's up to you to do the things that puts you in control. And what I mean by that is that you have to understand the game. The game is that you're not going to win every trade. And when you lose, you don't want to lose more than 2% of your equity in a trade, okay? Certain rules that you, sometimes 1%, sometimes 0.5%, depending who you are, how big your account is, and your position sizing, keeping your losses small is the first step in you controlling what's happening in the movement of the market, okay? So the market, yes, it'll do what you want to do, but we are in control of how we respond and how we're going to manage that. So when somebody says, "Oh, the market took me out," market didn't take you out. Your trading plan luckily took you out. You know, oh, the market, I was one with the market today. I'm okay with that. You know, if you feel like you're, but it's the negative stuff that you don't want to be overconfident. But you want to understand that you are in control, and it's really not the market. Okay, the seventh belief is that a good trading plan is all you need to succeed. And I think what I've talked about in all of this up to now is the fact that you don't need a good trading plan is not all you need. You need to have control between the ears. Okay. And so I implore you to make this a priority and make it part of your trading plan, that you do some sort of mental training, deep breathing, subconscious training. You know, we offer that to our clients in the Disciplined Trader program that we have, and you know, it's $67 a month, or it's $33 a month if you're on a yearly plan. But for next to nothing, you can take control of how you're thinking in the mental and emotional issues that you're dealing with, that's getting in the way of following your trading plan. So a good trading plan is good. There's a lot of good ones around, but you need to match it with who you are. Okay, so let me now go ahead and get into some charts, because I want to first talk about simple trading plans, because this has been my focus for really the last 2 years. Because what we found when we're coaching traders for the mental and emotional issues, which is the basis of our business for all those years, and really still is, but what we developed, what I realized was that if traders have a simple trading plan, they are much more likely to be able to control what's between their ears. Okay, it's that simple. The simpler your trading plan is, and it doesn't have to be simple to the point where buy anywhere. I'm talking about with a trading plan that you've tested. If it's a simple trading plan with 2 or 3 things to watch, maybe even 1 or 2 sometimes, then you're going to be able to follow that trading plan without jumping off and making those gut-wrenching 10% and 15% losses to your account. Okay, I want to show you 2 setups. I'm going to show you a trading plan right now that is the hottest one in our coffers, and it's called the loaded gun trading plan, and it's because of this symbol right here. This symbol right here is a trigger symbol. It's and it looked to me like a gun pointing up, and I guess I should. My wife doesn't like the fact that I named it loaded gun because it's violent, and she's probably right about it. But by that time, people had bought the program and were doing very well with it, and I couldn't change the name in the middle. So loaded gun is this is a small doji. Okay, well, this is more of a spinner. A doji is where this, of course, are candlesticks. And I'll look at the green candle first. When you have a green candle, it means the body is the fat part in the middle. The wicks are the extensions at the end. And when you have a green candle, it means that the close was above the open. The open was here of this period of time, whether it's a day or 10 minutes or whatever it is. I don't trade tick charts. I trade 10-minute charts, 5-minute charts, so on. And so in a 10-minute chart, in the beginning of the 10 minutes, the market opened here and traded in this area all of the 10 minutes and closed here. Okay, so this shows you that this is a way of, this is an explosive move, because you started here, you ended here. This is a pretty, a strong candle. This also is a 10-minute candle, but there was a lot of indecision. There was a shorter range during the 10-minute time. It's red, so it means that the close was below the open. That's when it's red. Colors can change. You can change the color on your chart. I use green and red, I guess, because I like driving. And and when this is a line and the open equals the close, in other words, in this 10-minute period, the open was the same price as the close, and therefore you have a long, here it's almost very close. The open and the close are almost at the same price. So this is a signal of indecision. When you have an indecision candle like this, followed by a decisive candle like this to me is a trigger to buy. And I'm going to show you how that works in a second. Here is a sell trigger. Now, this is about the largest spinner that I will show you, or that I use in the loaded gun. This is where the body is small. In this particular case, it's about 40% of the length of the entire 10-minute move or daily move, whatever this candle represents. And we're seeing that it really doesn't matter if this small bodied candle is red or blue or green. What matters is that you get an accelerated move in the next candle. When I see that, we've moved from indecision to decision that we're going lower, and therefore this is to me a signal to short. There's one more condition that I'm going to show you. Does everybody follow me on this? Everybody seeing what I'm talking about? Can I get a hallelujah? Just trying to look at the. Okay, I got a yes from Guy, and a sure. And okay, let's look at some charts here. Let's look at some charts, and this is a chart of the S&P, and I just took it yesterday. Okay, just took this chart, captured this chart yesterday. Look what's happening here. Let's look at this right here. Small candle, okay, followed by an extension. Small candle followed by an extension. This is what I talked about. Indecision here, followed by a decisive move here. This is a buy trigger to me. Now, this right here is an exponential moving average, okay? It's an 8-bar exponential moving average. I'm giving you enough to hurt you here, really. I'm showing you something, but you really need to know some of the nuances before you would attempt to do this. You can actually make some money with what I'm just going to tell you there in my experience, but you can make plenty of money if you, I believe, if you have all the nuances that I've learned along the way. But look at this. We have a indecision followed by a movement through the 8-bar exponential moving average. This would be my buy, okay? And we start moving up. Now, where would I put my stop? My stop is below the formation being the two candles, okay? The indecision candle and the explosive candle, okay? So I would have my stop down here. I would not have been taken out here. I'm interested in the closing of these bars, okay? This looks like a 60-minute bar chart. Okay, so each of these candles is 60 minutes. And when do I get out? I get out when there are two closes below, in the case of a long trade, two closes below the 8-bar exponential moving average. So here is, I'm here and I'm moving higher. I'm here and I'm moving higher. Now here is another short signal. This is a spinner, indecision, followed by a movement. So it's the reverse of what we see here. This, if you make it part of your trading plan, and I would, again, there are a few options when I'm going to give you all the pieces of the trading plan and the basic core that you don't want to mess with, and then you can add nuances or subtract nuances. But I'm talking about right here. So you'd be this is a nice profit here. In the S&P. This is about a 30-point move. Okay. Now, one thing that I will, one of the nuances I'll give you right now, and there are many nuances. I have found that if you take on multiple positions, and 2 is a multiple position, or if you're trading stocks, if you're trading 100 lots, usually then you've got to look at it as 50 shares, 50 and 50. But I like to take my profit on the first half of my positions when we have a movement equal to this extension. So when I take this trade and buy here, either at the close of this bar or the open of this bar, I am putting a sell limit at I measure this, and which would be right around here, I would be putting my sell limit right in here. So I would have taken my first profit on half my position here, and now I'm moving my stop up to break even, okay? And I would have ridden up the second position till I took my profit here, okay? Now, if you were not in the market, okay, and you sold the position here, okay, and you went short based on what I'm telling you, okay, what I'm advising you as far as a trigger to get in on the loaded gun, you would be short here. You'd have your stop up here, okay, and you would above this top, above this the formation, which is again is the two candles, and you would have been struggling here for hours as nothing was happening in your favor. Now I have a nuance that tells you how long to wait in my experience. But if you didn't have any of the nuance and you waited, you would have gotten very nervous here, but you would not have been stopped out. But you would have taken profit on half your position right in here. Again, equal to the length of this. You're taking your first profit in here. You would have taken the profit on your first position here. You would have moved your stop to break even, and you would have been stopped out here, okay, because your break even would have been here, and you would have been stopped out right here. But ooh, look, here's another signal to go long. Buy two positions here, put your stop down here, and we move higher, okay? We move higher, and we would have taken our first position out with the equal move to this bar, which would have been here, and we're riding the second position, of course, we would have moved our break even up to break even, and we would have been riding position. Oop, we have a reversal position here, indecision followed by, so we would have taken our second profit here. Okay, now if you just were waking up and you just saw this move, you would have been short here. You can see it gives you some trades in many different markets, especially the S&P, but in certain stocks and so on, you're going to get, in certain time frames, you're going to get more triggers than other triggers. But look at this. Here's one where you would have gotten short, and we had one close above. Again, remember, two closes. Nope, didn't get out here, so you would have still been in. One close above, two closes above, and actually we would have been stopped out maybe here on this movement up, because our stop would have been here. Okay, we probably took out one of our positions on this tail right here, because again, we're looking for a movement down equal to that. Let me go back to that. So if you can see, so we would have been stopped out on our second position, and even if we weren't, we would have been stopped out on both positions. In this case, we would have taken our profit here. In other words, this would have had a buy limit here, of which we would have gotten hit here and took our profit on one position, and we would have held the rest, one position, two positions, or if this actually didn't take out this top without drawing the line here, I can't do that. Then we would have been out here with a short. Or if you do what I asked you to do, and that's take your second position, get out of your position here, you would have moved your stop to a break even, and we break even on the second position. Okay, I don't want to describe all of the nuances, but I want to show you the value of this trigger. Okay, again, I wouldn't start trading on this without a little bit more, because the price that that we charge for you having the entire loaded gun program trading plan is not a lot of money. It's not $1,000, not $500, it's not even $400. It's a small amount of money. Okay, so I want you to have it. That's what I'm going to show you in the end. But I want to show you that a simple trading plan is really where you want to be. Okay, and so let's look at Apple, because people are always saying, well, do you do stocks? Well, here's Apple. This is a daily stock. Is this a daily? Yes, this is a daily chart of Apple, and this is the worst place to get signals, because a lot of signals, because there's a distance between the open and the close. When it closes at 5 o'clock or 4 o'clock, then the next day it's not going to open for you till 9:30 unless you're trading after markets, and there's ways to do that. But so therefore you can have gaps. But look right here. I'm going to show you a couple here. Here's a signal on the long side. Now there is a gap. We're on the south side of the exponential moving average. We're moving higher here. This is a buy. We're taking out half of our position and an equal amount here, and we're moving our stop to break even, and we're riding this all the way up. There are no two closes below the line, and we are going all the way up from literally 260 to 380. And I'm saying and here's the reversal where we have again a reversal signal, of which if you took, this is a very attractive thing. It just didn't work out this time. But look, you would have had a short loss. You would have had this kind of gain, and this is what the loaded gun trading plan is all about. Okay, it's about short losses and potential big gains. And along the way, even though you can have a short loss, many of the time you can take out that first position of the two, or that first half, and wind up making a very small profit while other people are losing. Okay, this is for you FX traders out there. I traded through the futures market, but here's the euro dollar. And this looks like a 240 chart. I like to trade 240 minutes, which is 4 hours. But look at this. Look at this. Again, you have to have some discretion on what a trigger really is. These are 3 dojis in a row. This is a lot of indecision on the market. And even though this is not dramatic, this could be a place to take a minimum position. This right here looks like maybe even a better place. Okay, but you have to measure your risk. Maybe this risk here is too big, so you have to measure your risk before you take a trade, because there are plenty of trades you're going to be able to take. But whether you took it here or here, look at this move. 114, 115, 116, and this is in a two-hour chart. And look at this. Other how this 8-bar exponential moving average, it holds up. I've got other advantages for you, but with other numbers. But I'm showing you the 8-bar exponential. Look at how it can dip below, but is closing on each of these bars above. You had one close below, and this right here looks like it's on the line. Now, there are many nuances to keep you in trades, and others that I can show you that if they fit your personality. But here's another, and if you get knocked out somewhere, let's say this was the second close below. Here's another entrance trigger, okay, that would have gotten you half in a profit, because you would have measured this right here. So there are triggers to take it. And look at this. This is a bar here that probably would have done you well, because the euro dollar is doing pretty well today. But I didn't show you. Let's see. I didn't show you some of the other things in the chart. This is the RSI, which I use sometimes as a confirmation, and I show you that as part of nuances. But we've got about 10 minutes here, so I wanted to, are you digging this? Are you digging this at all? Are you? I see Jeff had to go, and thank you. Anybody? Shall I keep going? You ready to see some more? Do you want to see some live trades? Okay, let me first say to you that this is what a simple trading plan looks like, and I want you to have one of these. And I'm not going to explain a whole lot about this, except for to say it's very inexpensive, and it follows. If you like what I'm talking about capturing a little bit as you go, leaving the extension so that you can make that big trade, but always protecting yourself with a short risk in case it doesn't work, then you want to look at this simple trading plan. And of all the simple trading plans we have, I want you to look at the loaded gun. This is the one that's really been performing for the last 18 months. And in a simple trading plan, this is purposely you're not able to read it. You have your entry rules, you have your trade management rules, which include exiting and things to, and when to move stops, when to trail stops, and so on. I always throw in a plan observation and some of the triggers and so on. You've seen some of these already. I want to show you more specifically what to do here, but this is on one sheet of paper, so you always have your simple trading plan in front of you. Okay. I want you to go after this is over, or click it right now and open a window on your. And when all is over and you're ready to really look at what you've heard today, look at simpletradingplans.com. I've really laid out in a very simple and clear form. I just changed this page to really just lay out what a simple trading plan is step by step, so that you can see why it's worth spending a small amount of money to get a simple trading plan like this, to start to either add to your current trading plan or work it alone. The simple trading plan operates on its own. Okay, so let me now go to again. SimpleTradingPlans.com. I'm not likely bringing this window up again, so just write that down or click it. SimpleTradingPlans.com. Okay, so let me get out of this and let's go to my screen. Okay, give me the name of a stock or a commodity, and let's take a look at it with the loaded gun in mind. Okay, let me see if I can. Yes, it is blurry. It's blurry there for a reason, because I just don't want to give away the simple trading plan. So if you look NQ, okay, well, that's not a stock symbol. You're talking about, I'm not sure I can bring that up here. Give me, let's look at a stock, GE. All right, let's look at GE. I have my system set in kind of an interesting way here. Hold on a second. GE. Don't know why I'm not able to get that up. Hold on one second. Let's try this. Okay, here's GE. Now look at the loaded gun. Okay, you've got here's a signal right here with loaded gun in GE. You would have been in here, and you would have had a sell stop here. You would not have made money on this. You would have there's 1, 2 closes. So you're out here. So it looks like the loss would have been a couple of ticks. Okay, here we really don't have any signals. Here's a signal right here. You have a small spinner followed by the extended move. You're a buyer here. You're moving higher. Okay, you're taking out half your position here. For your very small accounts, you can do this with one position. Okay, you'll just not grab the small amounts of money, which really can add up to a lot if you've ever traded, if you traded a lot, you know that. But look at this, you would have made money all the way from 650. It looks like about 650 here, 620. Looks like 625, all the way. You would have, of course, you would have made a few dollars a share on your first half of your positions. You would have got a little scared here, but it looks pretty good right here. And some of you may have, I show you how to make limits on, if you get a multiple extension, you get big money. Sometimes it's good to take your profit. And I show you how to do that too. But here's one below, the second below, you're out here. So you had a nice move from here to here. Okay. Here's another signal possible. Now it's not really signal. All right, let's see. So there's a couple, you would have made money on this stock trading the loaded gun trading plan. Let's do I have NASDAQ futures? Let's see if I think I have NQ here. Yeah, this looks pretty good. Give me let's look at a time frame. Okay, let's look at the NQ. Here's March. You don't want March. So let's look at this. Here's the daily. Not really here, but I show you how sometimes you can combine this. But look right here. Boom. Here is a small. Here's a spinner followed by a move higher. Okay, which I like because it takes out a bunch of previous highs, which is something that I teach. Okay, and it moves higher. And then as we continue to move higher, hang on one second, I'm just checking the time. We've got about 3 minutes. We are in this trade. Of course, we take a short profit equal to the expansion here. So we have a nice profit. We've moved our stop now to break even. And now we're riding this higher. Here's one close below. The second close is right on the line. So we're still in it. We're still in it. We're still in it. We're still in it. And here we have a reversal situation. And if you can either reverse here or you can wait for that second bar. Either way, you would have been out here. So here's a really nice trade in the NQ. Okay, and I kind of knew that would happen because it's been great in the S&P. Here's a short position. Here's if you just kind of woke up. I tell you what I try to teach is that the smaller this body is and the more indecision, the more the extension has meaning. So for some of you who interpret it in whatever way, you've got to decide the way you interpret. I'll show you how to do that. You would have taken this trade or not. But if you didn't take this trade, if you did take this trade, you would have had a loss of this amount, a small amount compared to this is a signal right here if you're not in to go higher, and we've gone a lot higher here. So the NQ did a nice job on the daily, and it would be probably, let's look at, just because we don't have a whole lot of time, let's look at a 10-minute bar chart, okay, of the same commodity, of the same E-mini NASDAQ, okay? So here we go. Look at this. I mean, it's going to flip you out when you see this. Now, again, don't try to trade this without all the nuances, because you're giving, it's kind of like driving, and I'm sorry if you have a Volkswagen, an old Volkswagen. It's like driving an old Volkswagen instead of driving a Maserati. If you have just a few of these, you can double and triple your take. Okay, look at this. This is a 10-minute chart. I mean, look at what you can do in 10 minutes with this. Okay, so here you're taking out your first position at equal to this extension would have been here. You've dropped your break, your stop from here to here, and now you're riding this all the way down. Okay, and you're right here is where you'd be out. Okay, so you're here. Here's another signal here, on a 10-minute chart. Okay, a 10-minute chart. Now you can go back and look at all the ones I'm missing. I'm not taking this because I don't like the size of this right here. I'm used to taking smaller bodies, but I like the small spinner that is followed by the extension. And look what you will wind up with here. So I hope you really enjoyed that. Again, I really want you to look at when you're done here, either click this and open another window, but go to the simpletradingplans.com and learn about loaded gun, because the more simple trading plan you have, the more you can keep your mental and emotional issues contained and win, because it is the mental and emotional issues that is likely getting in your way. And it may be getting in your way because it's too complicated a trading plan. It's something that you can't trust. Go to simpletradingplans.com. After all this is done, when you're ready to kind of relax and really see what a simple trading plan could do. Anna, so much thank you to you and allowing me to present this, because the more traders that I can show simple trading plans to, the more traders I can help. So thank you again.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci method. In this webinar, I will be teaching you how you can improve your trading with 5 critical steps using Alpha Fibonacci system. Trade it on Wall Street. But first, I would like to remind you extremely important disclaimer. Fibonacci Trading Institute, myself, or my incredible team are not registered with U.S. Security Commissions or any financial regulatory authority. All the content in this webinar, courses, software, and communication for educational purposes only. Nothing is ever to be construed as a financial advice. Past performance not indicative of future results. All software, all demonstration as is without any express or implied warranties. Trading futures, stocks, and forex involves substantial risk, and I hope and pray you're fully aware of these risks. It is essential to recognize that all testimonials from our students and graduates of the course are believed to be true, but the facts stated in testimonials had not been independently verified. We have an incredible community of traders, as you will see in this webinar, but students' performance does not guarantee anyone else's performance. This is standard required disclaimer. Let's start, shall we? In this webinar, we will cover about Alpha Fibonacci trading system. We will discuss 5 crucial steps to improve your trading, and we will go over multiple examples in current markets, from day trading futures to stocks to Forex, and of course, traders globally trading Alpha Fibonacci method on options. You will see how students applying these crucial steps on all instruments, including this morning. Briefly about myself. I hold multiple degrees. I've been investing in real estate since the day I arrived to incredible country, United States of America, land of milk and honey. I was political refugee. I had brand new baby on my hands. But I believed in this country. I believed in very bright future. And because I started investing in the markets in real estate very, very early, I became very successful. By the time I turned 30, I made first million. However, when the shock and horror of 2008 arrived, it's a very powerful reminder of what just played out. Crashes will play out. So when I was introduced to Fibonacci in 2004, I recognized during the crash of 2008 there is something that's drastically more powerful than news of fundamentals will ever be. That Fibonacci what forms all markets. Ever since I devoted all of my time, all of my effort to developing proprietary Fibonacci strategies, Fibonacci software. I developed multiple strategies, multiple software. I've been teaching traders from beginner to hedge fund manager in US and globally how to trade proprietary system on all instruments. We also have Fibonacci Trading Institute YouTube channel and podcast channel where you can listen to traders globally who are trading the method. I trade the world meeting with students. Students invite me to their weddings. Students bring in their spouses to the course. We have husband who just brought his wife, who brought his best friend. We have father who brought his son. You will see all of this next. Alpha Fibonacci trading system is a complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software. It is a strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as strategic alpha Fibonacci chess. So let's dive straight to it, shall we? Here's a chart on Dow with Alpha Fibonacci system. March 21st, 23rd, Black Thursday, institutional bullish trend inception. Alpha Fibonacci traders knew this in advance. We identified that when price will reach this level, this is crucial institutional buy point. Nothing else will ever tell you this in advance. Alpha Fibonacci system will. Since 2009, institutional rallies started from Alpha Fibonacci decision 0.25 times. Institutional bullish trend inception on Black Thursday is reached. So when this level is reached, there is panic on the news. It is the worst day ever. But intelligent traders understand very, very clearly. Only if you turn off the news, only if you turn off the panic, only if you understand what institutions do, you will respect the most spectacular bullish rally, vertical rally since 1987, with the biggest profits for institutional traders in 40 years, despite the worst economic crisis. This is a very powerful lesson on power of pure price and alpha Fibonacci system, as method identifies all in advance, never after the fact. And when institutional rally will reach this ultimate high 29,000 level on Dow, you need to be prepared. And if you understand why market is so difficult now, you are taking a well-deserved vacation. And if you can master these brutal markets, you can trade anything. Because the most difficult markets on record over extended bullish rallies, which can last many, many months. When institutions holding positions, markets are challenging. This was easy part. This was spectacular, breathtaking, bullish support. This was phenomenal. This was last opportunity 2 weeks ago. For many, many months until institutions will start closing positions, markets will be very, very challenging, which means you must be prepared. And that's the power of the system. You strategize in advance. You trade with institutions with ultimate precision on any chart you choose, from 1, 5, 15-minute S&P, Dow, NQ, Bitcoin, Euro, Pound, Apple. You decide what you want to trade. And here is the reason why. If I come back to this chart, take a look. This is S&P in current markets this morning. On July 24th, on July 29th, on July 30th, this was institutional buy point. This was second best. If you short it anywhere near these levels, you have a lot to learn. Alpha Fibonacci trader was on standby, looking to buy the bottom with institutions. On this week and prior week, this was ultimate buy point, not here, traders. And if right now I will take this pointer and I will show you the power of the system, you will see what we will be discussing in tomorrow's class and what you can view in modules 3 and 4 with hundreds of videos. How in advance you know where to buy, where to sell the markets. Here's 5-minute chart on S&P. This was market close. So if you're buying anywhere near here, you have a lot to learn. Nothing good happens here. Never, ever, ever. If you're buying near Alpha Fibonacci reversal zone. But if I convert this chart to 15, to any time frame, any instrument you trade, you will appreciate the power of this system. Here is S&P E-mini future on weekly chart in the last 10 years. This is correction 2014, 15, 16. Look at this. Identical support as played out on S&P in the last 2 days, except this is institutional long-term chart where billions of dollars traded. So as a day trader and investor, you buying at 1800 level, you are in excellent shape and you are prepared for correction 2018 when S&P starts selling off. But as an investor, you knew this years in advance, many, many years in advance. You're trading with institutions and not against them. And when sell-off 2018 reaches Alpha Fibonacci support, you are very well prepared. You are buying with institutions from ultimate bullish trend inception. And that's exactly what played out in the last few months. All in advance, never ever after the fact. Phenomenal sell-off 2020 identified months in advance. You are not losing sleep, you are not stressing out, you're extremely well prepared. Stress is not a good thing. Stress creates health problems, losing sleep, wiping out profits. But if you're understanding the power of the system, if you're understanding where reversal zones are, you are not panicking. You are very well prepared. No matter if you're holding position for days, weeks, months, and years, utilizing long-term charts, or if you are day trading the method. Identical power, identical accuracy apply. If you're trading 3-minute or monthly, weekly charts, as traders do globally, it is all the same, no matter what you trade. And that's S&P today and in the last 10 years. So here's a legend in the course. You can listen to Dominic on our podcast channel. Andy, his incredible father, brought Dominic to the course. Dominic said, "This is the best video game in town. This is so easy." Dominic right now on vacation in Spain. Dominic knows what he will do for the rest of his life. He will never need anything else ever again. So Dominic can accomplish such performance, and Dominic is so grateful and can trade during such difficult markets, spending less than 2 hours in front of the screen per day. So can you, using crucial 5 steps we will address next. First key step: trade with rules, indicator free, price and Fibonacci only. If you're ever cluttering your mind, if you're ever cluttering your time with the rest of the junk, with the rest of delayed artificial stuff, if you're chasing magic point, if for the last 20 years you've been chasing and chasing and looking for answers, answer lies inside of you. This is all you ever need. This is all Dominic looks at. Every single indicator on the planet developed after the price. So why go to artificial afterthought when in fact simplicity is key to your success? Right now we have 7-year-old son of another trader practicing to beat 14-year-old. So if they can do it, so can anyone, because simplicity is key to success. So if you look at this, you know very clearly, market right now in pain. But if you can trade S&P hourly, you can trade any chart. If I convert this chart to 5, it looks identical. I recognized this in 2004. I recognized if you can trade 5-minute chart, you can trade Apple monthly. You can trade Euro weekly. It's all the same, traders. You will never need anything else. Dominic knows what he will do for a living. Why are you chasing indicators? The answer is in front of you. This is present on any platform. Price on every single instrument is identical. It will never change. Stop chasing magic bullet. Start paying attention to pure price. This is crucial, critical component of Alpha Fibonacci system. And if you apply the rules, you stop chasing markets. You stop sweating bullets. You start trading consistently without gambling, without speculation, without need for another indicator ever again. System consists only of two components, indicator-free price and proprietary alpha Fibonacci retracements. Nothing else is needed ever across all instruments. Here's S&P Mini short trade with software on NinjaTrader 8. Pure entry, pure stop, pure targets. And when you're trading with institutional buyers and when you're trading with day trading ranges, you're trading less than 2 hours per week. If Dominic can do it, so can you. You do not need another indicator again. This is what traders do. As you can see, Andy says, my 14-year-old son is up 325 points on Dow this week using only AFS. This was last week before Dominic left for vacation. Ken sharing 5 minutes is done. Study all day. He's practicing because Ken understands repetition and focus key to success. But as Andy shares his son trading less than 2 hours per day, they do it together as a team. Scott shares maximum 90 minutes a day, but Scott is obsessed with the system, with the method. He's trading everything, as you will see next. This is what you can do, being your own boss, trading any time you wish. All depends on the instruments you trade. If Dominic can do this 3 profitable weeks in a row, so can anyone. Thousands and thousands of emails and posts in the last 10 years. All of this playing out now when traders spending time golfing, enjoying their life. Jennifer, Emmanuel's wife, her husband brought her to the course. Newborn babies right next to her. And you will see what Ken does next, trading Bitcoin and option. Currently, he's 88 for 88. That's it. That's the power of community and system globally. So this is what Brad has done in the months of July. In the worst markets ever because overextended rally, when institutions holding positions are the worst markets ever, you can see his every single trade to the tick, 120 points on S&P. On one lot, it's $6,000. On 10 lots, $60,000. On 20 lots, $120,000, working less than 8 hours per week. Some of the day, less than 5 minutes. When price at institutional support. When you come to our homepage, this is where you will find journeys and stories of our traders, all in front of you. Their podcasts. Brad was making $9 an hour at Best Buy. Tried for 20 years before. You can see the movie he has made about his journey. You can see what Ken does. You can see what Scott does. You can listen to Dominic. This is only the start of this webinar. Let's go on to very powerful reminder of Alpha Fibonacci system. This is what you see in front of you. This is critical support on Amazon a couple of years ago. Bright pink line identifies the end of the minor trend. In advance, Alpha Fibonacci trader knows no matter how spectacular the earnings will be on Amazon, when price will come to reversal zone, Amazon will crash with more than 80% accuracy. Amazon comes out with excellent earnings. So why in the world is Amazon selling off? $700 per share. Because market is alpha Fibonacci puzzle. If trading on the news worked, every single person would be shorting the markets now. The most powerful vertical bullish rally during the worst crisis and Amazon crash during the excellent earnings is a stunning reminder. Trading with price and alpha Fibonacci system is a path to success when Amazon does this again and again and again. 2019 selling off another $400 per share. Alpha Fibonacci trader sleeps well at night, knowing very crucial buy point. So when Amazon does this, no one is surprised. Amazon have been in correction for the last 6 weeks. What to do with your position? You must know Alpha Fibonacci rules, as Brad as Dominic apply to their trading. So Scott is a new legend. We're celebrating 10-year anniversary of Fibonacci Trading Institute with traders sharing what they trade and how. This is from this morning, an hour ago. Ken, his video on the website, dash 7%, 88 for 88 trades. You can view the movie as Ken has done. During the crisis, he dived deep into the system. He took advantage of the crisis. As Scott shares, this is what he has done: 806% on 500 LNK USD and other stocks. This is community of incredible traders. Time and time again, this is what possible. This is only this morning and yesterday. That's it. You will never need anything else. It is that simple. This is Scott's account. Prior to the start of the course, the account was at 4 million. He is well above 6 million. You do not need multi-million-dollar account, as you can see from Ken's video on Ken's performance. Ken started trading from micro account. Traders trading the system from few $100 account to multi-million and billion-dollar accounts. It shows you what's possible if you make an effort. It is that simple. Choice is yours. What you want to trade. Second key step, strategize as institutional traders do. Identify institutional trends and ranges prior to placing a trade. Successful trader trades only with institutions and never, ever, ever against institutions. So if you're looking at this chart, take a look. This is Dow prior to reaching alpha Fibonacci support, correct? On March 23rd, panic, market halted. Alpha Fibonacci trader is excited. Alpha Fibonacci trader knows that no matter what on the news, when this support is reached, it is ultimate buy point. This is what played out during sell-off traders. This. It is absolutely stunning reminder how essential and crucial it is to turn off the noise, to turn off the panic, to turn off the negativity, and to understand negativity and panic sells, makes money for top 1%, which just became 25% richer. I coach my traders how to become top 1%, how to buy the bottom with institutions. Traders focusing on price, buying with institutions and not against them. Right now, from this point, this is where Dow is. There is no surprise. We're dealing with the most challenging markets on record. This scroll, this pain can remain for many months. Very few gems are present. But as I was recording in this morning's video, where you can see thousands of videos on our YouTube channel, when market giving you such a pain, when market giving you such dangerous trading ranges, with Alpha Fibonacci software, you are not losing sleep, you are not in panic. Pure price, buy and sell points. Very few are present. Institutions keep adding to their positions. Buying the bottom was ultimate buy point during panic, during negativity. Challenging markets are here to stay. This is your ultimate test. You can deal with this market. You can deal with the rest easy. Institutional traders packing Hamptons, historical values in real estate in Hamptons, because traders cannot leave the country. So if they're holding positions, if they're bathing on the beach, you are tested to the core. Ask yourself a question. Have you been buying the bottom? Have you been trading with institutions? If the answer is not, you have a lot to learn. Taking crucial steps with Alpha Fibonacci system. And that remains the core, and that remains critical, as you can see traders do. On institutional morning, trading morning lasts less than 2 minutes. As Brad joking, you saw his performance. As Scott, after 1 month in the course, took his account from 100,000 to 4.5 million. Gene is trading on options. This is the reason we are celebrating 10-year anniversary. This is what traders focusing on. Pure price and Alpha Fibonacci only. You will never need anything else. So when oil crashes and reaches ultimate bottom, this is where intelligent trader buys from. The ultimate bottom is exactly what played out recently on oil. 2 years later, oil doubles in value. And when oil reaches reversal zone, oil starts selling off. No one is surprised. And when this year oil is selling off, intelligent trader understands what to pay attention to. Whereas ultimate buy point will be, it's at the bottom, it's negative. We've never seen negative number before. Intelligent trader knows if Alpha Fibonacci system showing you negative buy point, be prepared to buy. Never, ever, ever short near. And oil skyrocketing from the bottom been frozen at Alpha Fibonacci resistance for the last 2 months. So if you understand how to buy the bottom, how to sell the top, it doesn't matter if you trade 5-minute or daily or hourly or holding position for months and years, price action remains the same. Every single day your trading range changes. It is essential to identify this. Every single day for the last few weeks, trading range had been very challenging because of overextended rallies. But if I bring up to your attention Dow right now, Dow giving you 10 times more trades than S&P. This was ultimate buy point, July 30th and 31st. Yesterday Dow was in chop for 7 hours. Ultimate buy point on Monday, and yesterday Asian session. It's chop again. If I convert this chart to 5, what do you see? Ouch, it's a waste of time trading Dow now. Buy the bottom, buy at support. If you respect and understand this challenging market, you will not waste your time trading junk. You will buy at ultimate buy points. And you will never trade against institutions. It should never, ever, ever be an option. So when markets are at very difficult points, traders share. When my YM is mentally irregular, no trades this morning, moving to different instruments, trading S&P, trading gold. For Scott, cryptocurrency always moving. Emmanuel with his incredible wife trading Nasdaq, trading S&P. If these traders can do this during such difficult market conditions, imagine what they will do when markets are easy. Fourth crucial step, utilize synchronicity of the markets. If you are operating with scanner, it is very, very easy. When multiple alerts come on your scanner, it means institutional buying. Choose the best trade. With a single click, you can add any instrument. You want to add multiple instruments, please do. And if you would like to add hundreds of stocks, many traders do. No speculation, no need to flip charts, chase the markets, and place trades after the fact. Your fifth crucial step of the Alpha Fibonacci system to trade with supportive, like-minded traders with experienced mentor with established system. This is from this morning. I love the comment from Emmanuel. Alla's teaching is ridiculous. If we just listen to what she teaches, we will be millionaires in less than a year, as many have done exactly that. Emmanuel brought his wife to the course and his best friend. Ken 88 at 88, as Scott is joking, this is only the beginning. And that's from this morning alone. There is no surprise, all precise with Alpha Fibonacci system. And that's community of incredible traders in US and globally in the last 10 years. So this is from Scott. He became bored with futures. He went to stocks. Scott never day traded before. This is very first time. With Alpha Fibonacci system from $100,000 account, Scott simply made a serious effort. And when Jennifer sending me this email, sharing this, so grateful what you've given us. Hope, potential, and possibility. This is during insane crisis. This is the email I woke up to this morning. Stories like Scott, stories like Jennifer's, like Emmanuel's, like Ken's, like Brad's, like Dominic's, like every single trader who comes to me who is serious about trading shows you what's possible if you make an effort. That's it. Pure price for entry and Fibonacci for exit. Scanner is very powerful tool. And if you decide to trade gold, of course you can. Many traders do. Nothing blocking your vision. No delayed indicators here. None are present. And if I remind you the power of the system on Apple. 2015, Apple comes out with the worst earnings in 13 years. I present at hedge fund convention and I say, the most important thing is if Apple will respect support or not. Bright pink alpha Fibonacci support is the most important support in the market. And when despite the worst earnings, Apple stages the most spectacular rally and doubles in value 2 years later, this is a stunning reminder. Turn off the noise. Pay attention to price. And if you do, with Alpha Fibonacci system, You will sleep much better at night. And you can trade as Dominic, as Scott, as Brad, as Jennifer, as Emmanuel does. And when Apple reaches next level after earnings, you are not surprised. You are very well prepared in advance. And when Apple takes a massive positive reversal zone, what do you see at the bottom? Bullish trend inception, 140 level. Correct? Apple in freefall. Intelligent trader understands to buy support. But when Apple reaches reversal zone, it's a problem again. That's it. This is Apple in the last few months from 140 to 322. During crisis, your ultimate buy point was 220. Identical bright pink line as played out during worst earnings in 2015. That's the power of the system. You decide what you want to trade. System applies to every instrument, every time frame. It is that simple. Our students winning Forex competitions after a couple of classes. This is the end of the minor trend on pound. Pound respecting this level for 7 years. After the low from 2100 level, 136 is crucial on pound. Next level 124 and 111 is critical. So how is it possible? When Brexit playing out, why in the world is pound rallying? For one simple reason, pound reached alpha Fibonacci bullish trend inception, doing exact same thing as Apple have done, as S&P have done, as Dow, as oil, as Amazon have done. Reminding you, Fibonacci is what forms all the market. With predictive, precise alpha Fibonacci system, you can trade any instrument you choose. Simply identify what's appropriate for you and your account. So if complete beginner Pablo came to me, he never pushed a button on Ninja Trader. He didn't know what Ninja was. 2 years later, Pablo is founded by top step trader. Pablo started trading live after 3 classes. That's it. Now Pablo's 7-year-old son trading with him, preparing to beat Andy's son, Dominic. That's it. Brad's story you can see. 20 years of trying, making $9 an hour. Finally start trading live with 25K account. This is what Brad has done first year. Boom. Brad said goodbye to Best Buy. Brad is his own boss, spending less than 8 hours in front of the screen. You can become Brad. All you have to do, make an effort. Pure price for entry and Fibonacci for exit. You can win Forex competition as Kerry has done. And that's the power of the system, which you can trade with or without software, with consistency, with confidence, with precision. So if you come to our homepage, it is all on our homepage, traders. In summary, proprietary alpha Fibonacci system traded on Wall Street and in 50 plus countries since 2011. Future stocks, Forex, ETFs, Bitcoins, options. Method traded in Saudi Arabia on stocks and instruments I've never seen in my life. You decide what you want to trade. It is that simple. And when you listen to podcasts from our incredible traders, when you view their stories, when you view their journeys, Right below, you can see 4 options. For any platform comes with 3 months live group course, with video library, with modules, with software for Ninja 8, with video library, with live classes, with trading room, every single option. But if you choose private mentoring, I only have opening because traders like Dominic taking vacation. Otherwise, private mentoring fully booked. Due to current crisis, we are offering currently $2,000 off each package. Only few spots left. As this trader share, this is one of the best things they've ever done in their life. They found freedom. They found peace. They will survive any crisis. That's the power of being Alpha Fibonacci trader. So if you review the information on the website, if you view our video library, if you see students' journeys and stories, and you review all the information on the other pages, if you view our latest articles and videos on blog, I look forward to speaking with you. Simply click on Contact Us page and call or email me 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. Let me see. I'm out of time. If you have any questions, please do call, as we have very limited time for the webinar. Thank you so much, everyone.
Thank you
So
so much.
we are out of time, traders. My apology. Please review the information on the website and reach out to me. Thank you, Anna. Thank you, traders. It's been my joy and pleasure. Thank you, thank you, thank you. Bye-bye, everyone.